Good morning, lads. Or afternoon, Walter. How are you
Hey,
guys doing?
doing all right?
Really good, thank
Awesome.
you. Doing really well.
Trust you had a good weekend.
Yeah. Good weekend.
Good
Nice
stuff.
recharge.
Good
Yeah,
stuff.
very relaxing weekend.
Yeah,
I know it's a bit of a we have what bank holiday end of the week with Good Friday.
that's right.
Yeah, so looking to make the most out of the Monday to Thursday before taking the Friday off.
Yeah, awesome. Good stuff. Right, to all our viewers, welcome. Morning session, kick things off for the week. So we have Walter and Nandan with us this morning, and we'll look at their respective markets that they obviously follow. And yeah, hopefully get some trades going for you guys. Again, if you've got any questions, please do not hesitate to ask. Drop them there in the chat, and we'll be more than happy to answer them for you. Right, Walter, Nandan, you want to take us away?
Yeah,
Show us what
I don't mind
you're
leading the way.
checking out.
Yeah, sure.
Yeah,
Go ahead.
I think California, you guys, is still daytime for you, so let the nighttime lead the way. Yeah.
Yeah, of course.
Sorry. Yeah. One second to share my screen now.
good stuff.
There we go. Yeah, so it's an interesting one. Just looking at in terms of, can you see my screen now, by the way? So
Yeah.
I don't have my multiple screen. I'm sort of like just on my laptop today, so
Yeah, you're good to
I
go.
can only be on one screen or another.
Yeah, looking
Oh, good, perfect.
Hmm.
So yeah, so what are we looking at for gold today? I mean, after last week obviously we saw 3 consecutive days of price rallying for that beautiful 3-day rally. So yeah, so coming into today, I was sort of anticipating that price would give some form of correction in today's session. I'm not expecting like a deep correction, but I was expecting some sort of correction. So yeah, so this morning, my main setup today was a short. So it was very simple. Again, it's like my classic trade. The market gave that initial break to the downside, and then we had that secondary leg. After the secondary leg, error of interest became a shoulder block right there. And then again, just waited for that vector acceleration into the order block. So 1, 2, 3. There's a 3 beautiful candles right in there. And then and as soon as the market traded back into the range, that's when I took shorts. Stop went above the high, and then I simply just aimed. I could have added a much bigger target, but I just aimed for the low of the range. And the reason I aimed for the low of the range is because if you take a look at this, the market was in an accumulative range. So again, like my rule is very simple. If I'm trading in an accumulative range, I will just assume the market will stay in that range. So I'm not going to be like overly ambitious and aim to like anticipate some sort of breakout away from the range. Of course, as we've seen, market has broken out of the range, which is nice. So yeah, so for New York, this session, I'm looking at a potential. So that was the first trade of today. I am anticipating the market will potentially trade down towards. So we go onto the 1 hour time frame. The next draw on some sort of liquidity pool on the 1 hour is this slowdown here, right? So because you can see it's a relatively balanced market up until we get to this low, and then below this low, we still have an area of imbalance that remains open right there. So if the market is going to keep dropping in New York, which I do think it's very likely, we are going to see the market taking out this low and potentially trading into this imbalance down here. So it's just a question of whether we're going to get a good entry opportunity to engage in a continuation to the downside. Area of interest. So again, on the 30 minutes, the market has given that secondary leg. This is the most recent area of interest, which is the order block. So what I'll be anticipating in New York session is a pullback into this order block, and then I'll be looking to take a short from the order block towards the lows I've identified. So such as this low, and then of course this imbalance on the 1 hour time frame is another very good area to aim for as well. Okay. So yeah, and then the 15 minutes, the picture it's very similar. There is that secondary leg to the downside, and then of course now the market is forming that third leg. As we can see, like the third leg is usually final for me if it's like a very aggressive price action. But the price action hasn't really been aggressive at all. So at this point, I do think there's a very strong possibility the market will trade back into this order block And then from this order block, I'll be looking to take a short continuation towards this low. So 15 and 30 are pretty much aligned, which is always a good thing. It's now a question of whether we are going to get a deep retracement into the bearish order where we can get a short continuation trade on. So yeah, so that's literally the only thing on gold I'm looking at and I'm anticipating for New York session today, right? I guess. Sorry, say that again.
Nice trade you took there previously or earlier.
Thank you. Yeah, it was a very easy, nice short setup. In that just confirmed this morning down to that low. So yeah, so hopefully we see something very similar in New York. So a very nice, easy trade from the block, from the order block down to these lows below. So yeah, so for Bitcoin, so this one is a little bit of an interesting one. So it's what I'm going to say is a follow-up from my analysis last week, because essentially last week, just a bit of a recap of what I mentioned was that the market was obviously we're going to see some sort of a bullish reversal. But then if we take a look at the bigger picture, right? So there's a bigger picture daily, right? My bigger picture daily was very strong indication that obviously the market has been sort of like trapping below this leg. So we've seen a railroad track there, and we've seen another RRT formation right there as well. Right, so the market is sitting in that sort of like secondary leg cumulative range. So I am anticipating that at some point, again, the market could sit in this leg for days or weeks on end, but at some point, I'm anticipating an aggressive push to the downside because, again, that monthly target, that retest of, so if we've gone to the weekly time frame, right, the market came very close to retesting this is a major area of liquidity, this order block on the weekly. So I'm anticipating a drive towards that weekly order block. And then from there, if we do see a very fast and strong reaction to the upside, that for me would be the biggest confirmation that Bitcoin is ready to trade back towards those 100 levels. But for now, I'm not convinced that it's happening yet, right? Okay. Right now, I do see at most, obviously you see these equal highs above, relative equal highs right there. I do see the market potentially clearing out those highs at some point in the coming hours, even day, like could be a day or two, it could be by the end of this week, but I do see the market trading to clear out these relative equal highs. And then from there, we could see a potential continuation move to the downside. But for now, so longer term, I do see potential continuation to the downside. On an intraday perspective, I am anticipating a bullish continuation towards those equal highs above. So it's just a question of, again, where is the cycle? So right now, 30 minutes, there is a very clear bullish cycle in place. So we've seen that first instant, that bullish break of structure. And then, of course, we've seen that first bullish order block on here. Market failed to retest it. It's now sitting in that secondary range. So I don't know what could happen. One of two things could happen at this point. One, market trades all the way back down. This is most optimal scenario. Trades into this bullish order block. For me, this would be a no-brainer buy, and I'll be looking to go long. I'm not going to be trading long. So if that does happen, I'm not just going to go long and just aim to take my targets at the H1 BSD because Bitcoin can be very volatile. So I'll simply be looking to go long to the most obvious reasonable target, which would be the high of, I think this is last week's high, right? So last week's high would be the most obvious target. Yeah, so 30 minutes is indicating long. Price is in that secondary cumulative range. There's a question of whether we're going to see a pullback into that one, that bullish order block to the downside. So 15 minutes is exactly the same structure as the 30 minutes. So again, there's 15 and 30 minutes alignment, which is something I also like to look for. It's very, very, very ideal. So it's also, price is also in that secondary accumulation on the 15 minutes time frame. So again, the most feasible and the most favorable move in this situation will be for a deep retracement into that order block and then from there continuation. Of course, price could simply break above and keep on rallying. If there is a break above, then what I'll be looking for is a retest of this area. And then after that retest, I'll be looking to look. So within that retest, I'll be looking to take a continuation long from there. So yeah, so at this point, it's a waiting game. I'm not looking to engage with price where it's currently at. So either A, price pulls all the way back down into that bullish order block, or B, it breaks above, and then I'll be looking to take a simple continuation setup from there.
Gotcha.
Yeah, that's my intraday take on Bitcoin right now. Bullish is the most ideal direction for this.
Just
Nice.
quickly,
Yeah,
guys.
that is me on that.
Off my internet for a little while there, but you guys, nothing happened on your side. Did you experience any downtime?
No, I think we're solid. Yeah, I think.
All right, cool. Yeah, it must
yeah.
be on my side then. Something's happening with the internet. But anyway, I'm back. Sorry about that.
Yeah, all good.
So yeah, so that's it from me. I'm not sure if you guys had any questions or anything you wanted to sort of add on to that or layer on it.
No, I'm also seeing on gold. I've actually also traded gold overnight. Well, morning session my time. Also shorted it, so that was quite nice. Yeah, pretty straightforward. I obviously know what you look for, Walter, but it's the first time Nandan sees this, so maybe he's got questions.
Yeah. It's interesting.
Oh yeah, so some things I just said assuming because I've explained the rundowns so many times, so I just spoke with sort of an assumption of people knowing what the trend cycles are and stuff like that. But sorry, Nandan, you were saying.
No, yeah, I was just saying it's interesting to see you know how you guys look at the market. I look at it in a completely different lens. So it's always nice to see new perspectives. I really like seeing new perspectives. I like to see how other people view it. It's always awesome to see that.
Different ways to skin the cat, I suppose, right?
Yeah.
Absolutely. So yeah, I mean, I guess Nandan, because you look at something very similar in terms of you look at similar markets as I do. So I guess do you want to take over and share your insights on what you could be looking at for this session?
Sure thing. Let me share my screen really quickly.
Okay.
Okay, hopefully you can see my screen now.
Oh, there we go.
Okay, so yeah, if you're new here, anybody in the audience, and Walter, the way I look at the market is in terms of currency strength and weakness. I like to see, you know, what a currency pair is doing. It's called a pair for a reason. You know, it's not just one instrument. You know, the pound Swiss, for example, is not just the pound Swiss, it's the pound and the Swiss. So I like to see what is the pound doing against the entire market and what is the Swissy doing in the entire market. And then I like to make my judgment on what do I want to do with the pound Swiss. So I like to trade the higher time frame trends, you know, the H4, D1, and the weekly trends. These last 2 weeks have been absolutely crazy. Swissy was killing everybody. So we've now sort of just started consolidating, and we're pulling back now. So I don't know if the Swissies are going to continue. You know, I have a tool that I use. It's called a spreadsheet tool, and this helps me analyze the entire market. This is what I use for my daily market analysis, and it does exactly that. You know, it goes over the 4-hour, the daily, and the weekly time frame, and it does this for all 7 currencies or all 8 currency groups that I look at. So on the right, you have an example of a currency being strong. You know, in this case, it's the U.S. dollar being strong, and then on the right of it, you have what it would look, what these boxes should look like if the currency is weak. So it does that for every single currency group, and you know, the dollar, there's not too much consistency. Last week, you know, it was obviously getting killed. There's some slight weakness in the dollar pairs, but that weakness is starting to come out. Same thing with the Swissy. We were strong, really strong. It was breaking historical lows. It pretty much broke historical lows of almost every single pair. And now that strength has completely just come out of the market. And we'll actually go over that. You know, that's what happened today. The Swissy was weak. So it was nice to see that. But Euro, there's no indication of a strength or weakness. You know, the weekly time frame, we have all these pairs on the weekly indicating that that the euro pairs are in an uptrend, but the daily and the 4-hour are pretty much mixed. There's a lot of no trends. There's not enough consistency for me to say that the euro is consistently strong still. You know, the short term, the 4-hour, and the daily trends have pretty much come out of the market. So to me, that indicates the euro is still mixed. It's still a neutral force in the market. The yen pairs, are a little weird. You know, one day they're strong, the next day they're weak. They're ranging. And today, again, there's not enough consistency. Same thing with the pound. The pound, you know, we do have some intraday strength, which I'll go over today. But long term on the
Mhm.
4 hour, daily, and the weekly, there isn't really much happening. No trend support on our side. Looking at the Aussie dollar again, long term, it was weak. It was very weak actually earlier, but the weakness is starting to come out of the market, and we're actually starting to potentially have some strength come in. But it's still too early to tell whether the strength will continue to develop or if that weakness will come back in. So Aussie dollar is pretty much mixed and neutral in my standpoint. Canadian dollar, there is some slight weakness on the 4 hour, but I didn't really see anything on the charts that was really worth talking about. The dollar is still weaker than the Canadian dollar, but we just mentioned earlier, you know, the dollar um, weakness is starting to come out. So 4 hour on the New Zealand dollar pairs. New Zealand dollar is pretty much mixed and neutral as well. We don't have consistency. You know, these three boxes don't look anything like these two on the very right. It's not showing either consistent strength nor weakness. So the entire market it's a little bit weird right now. But I do have only two pairs that I wanted to go over. So hopefully you can see my charts.
Yeah.
Yeah, I use bar charts. I've been roasted on that before. It's the way I like to use way I like to look at things. These two indicators that I have on here are just exponential moving averages. It's a 12 exponential and a 5 exponential moving average, and they're my trend indicators. They tell me what the trend is on that specific time frame. So, you know, the 4 hour we're pretty much a fresh cross to the upside on the pound Swiss. And you know, speaking on the pound Swiss, if I was to go into this heat map tool, which I use, this heat map tool tells me how much a pair has moved since the beginning of the main trading session. And again, the main trading session for me is a 5 hour period of window. It's you know, you got to take whatever time the New York Stock Exchange opens in your time. For me, it's 6:30 in the morning. That's when the New York Stock Exchange opens. Go 4 hours before that, and then 1 hour after that. So that 5 hour period of window is where 95% of my trades are taken. I rarely trade in the Asian session. Um, Only time I'll ever trade in the Asian session is when there's a specific volatile news event. But other than that, I'm not really looking into the Asian session. I've lost I lost too much money in there. It's very unstable. You know what the movements you get in the Asian session, they're very short-term movements. They're either consolidating, random momentum that just comes in, or just not enough volatility for me to stay in a trade. But today in the market, you know, in the main trading session, we had consistent Swissy weakness and consistent pound strength. So the way this heat map works is, again, it tells you how much a pair has moved in terms of percentages since, you know, a couple hours before the main session. So it refreshes daily before the main session, and it's kind of like a candlestick chart just put sideways. You know, it's not based on some type of calculation or anything like a formula or anything like that. It just only
Mhm.
a bunch of pairs moved. Um, and with that, I like to see some sort of consistency in these currency groups. So right now, the consistent signals today were Swissy weakness and pound strength. You see 7 out of 7 of the pound pairs going in one direction, which is strong, and the Swissy pairs we had 7 out of 7 uh, pairs of the Swissy group going in the same direction in weakness. And you know, all these pairs are oriented differently. You can see the bolded letters are what that specific section is focusing on. So the area I have highlighted here, the U.S. dollar is in bold letters. So this section is supposed to be for the U.S. dollar. You know, if New Zealand U.S. dollar is red, that means the cross currency is showing strength. So in this case, the U.S. dollar is stronger than the New Zealand dollar. With that being said, you know, pound Swiss was the best trade to take today. Looking at it on the 15-minute chart, you know, we had a nice move upward. I completely missed this move. I woke up a little late, and at that point, we're already at a 1% move. And once you're at a 1% move or anything above 70% um, on the heat map, you're pretty much late to the move. You want to be as early as you can to the move. And by the time you get some sort of consistent reading, you're probably going to be past the first wave of movement. So
Mm.
wave has already happened. Then you get a reading saying, okay, we have some sort of consistency going on. In a perfect world, I like to wait for a slight little consolidation on the smaller charts and then a continuation, a break of consolidation, and a continuation in the intraday momentum. Um, Again, I like to use the smaller time frame charts, the M5, the 1 minute, 5 minute, 15 minute, 30 minute, even sometimes the 1 hour charts to enter into the larger time frame trends. So smaller charts are used to enter into the trends on the larger charts. Um, with the pound Swiss, if I look at it on the weekly time frame, even though we had great readings on that heat map, we're counter trend. The weekly is pointing completely down. The daily is still pointing down, but if I zoom in a lot more on this chart, you can see the trend indicators are starting to point sideways now. So to me, that
Yeah.
indicates that Swissy strength is coming out of the market, and it's like that on almost all the Swissy pairs. We're getting some pretty strong reversals now. So I
Mm.
just don't know if they're going to continue becoming weak, or if the Swissy strength is going to come back in a day or two. It's just way too early for me to tell. This is that weird point in the market where you have great trends available to you, but the short term, the 4 hour, the daily charts, and time frames below that, they're going against the trend. So this is where you're pretty much trading on strict intraday momentum. You're not really trend trading because you're not breaking out into any trends. The trends aren't really necessarily continuing right now. They're either consolidating or pulling back. So with that being said, this is the perfect time to scale back on your position sizing. This is a perfect time to moderate your expectations in terms of what you want to grab out of the markets. The pound Swissy trade, even though it had a wonderful move today of about 1.2% or something like that, um, I would consider it as a short-term intraday trade. This is a day trade to me. I'm not convinced yet that this pound Swiss is going to continue and potentially take back all of this move that we had last week. So I'm just not convinced of that for now. Things can definitely
Okay.
change within a heartbeat. So I'll continuously monitor the market until then. But um, yeah, besides the pound Swissy, that was the best intraday movement. The two pairs I wanted to talk about were in the dollar group, the dollar CAD and the dollar and the New Zealand dollar. If I was to go into the dollar CAD first, looking at this weekly chart, we have a beautiful weekly downtrend in place. This is a fresh trend. The daily is still in a strong, a nice downtrend. The 4 hour, I really like this. We're starting to consolidate. Now, the only thing is with a lot of these pairs is they've been moving and having very strong moves. So ideally I'd like to see a pullback happen, but if they continue to consolidate for another day or two, that'd be even better. I don't want continuous movements in the same direction for extended periods of time. That's when you get into overextended moves. You're too deep, and it's way too easy to get cycled out. If the stronger the movement, the stronger the pullback, and potentially the longer the consolidation is. So always keep that in mind. Um, Again, this daily trend is in place. So I'm looking at a break of the lows currently, which let me remove this price alert. For me, the lows are at 1.3825, and past there, I'm looking to move all the way down. I think we have a very strong chance of coming all the way down to here, which is 1.347, which is about 350 pips away. So that's what you get when you're on these larger time frames. You get great potential. Your risk to reward is really good, especially since you're trading with momentum and you're using the smaller time frame charts for your entries. That being paired with the larger time frame trends, I've seen and I've taken trades that I've had 20 to 1 risk to reward. It's fantastic what you can get when the market starts to align and show you, great trading opportunities like this.
Yeah.
The only downside is you don't have these type of trades coming to you every single day. They could, last week, that's exactly what happened. You had a trade like this coming at you every single day. I mean, I had on last Friday, 2 weeks ago on Friday, I had a trade that, I took on the Euro Aussie and the Pound Aussie, and those two trades moved 500 pips in profit within 30 minutes. That was
What?
absolutely crazy. Yeah, it was absolutely crazy, and that's what you get when you're starting to trade with intraday momentum, is you
Yeah.
get these very strong moves, and it was just based off the tariff news. I didn't care what the news said or what it was. I just looked at what the charts are telling me.
Mm.
So luckily, I do have that on a live session. It wasn't a live trade because the session started after I took the trade, but yeah, I went more into depth on why I entered into that trade and why I exited that trade. But yeah, 500 pips within 30 minutes, I can't complain about that. You're pretty much done for the year with a move like that.
That's a massive move.
Yeah,
500 pips.
it's a massive move, especially for Forex, where
Yeah.
1% move is massive.
Mm.
And one more thing I wanted to say is when I'm talking about percentages on different pairs, a 1% move is different for every single pair. You have to see
Yeah.
what a pair is quoted at. The dollar CAD is currently quoted at 1.388. So 1% move on this pair, you have to move the decimal point over two times.
Mm.
It's 138 pips. That is a
Mm.
1% move. That heat map that I was telling you guys about, it focuses on percentages. So I like to see, some sort of consistency, 7 out of 7, all those pairs going in the same direction. And I like to see at least a 0.2 to 0.25% on every single pair. And that's when I get interested in saying, okay, intraday momentum is starting to kick in and there we have consistency across the board. And, the best case scenario is you pair strong versus weak. That's where you get the strongest movements. So anything, anywhere from entering into a trade to doing my long-term analysis, I'm focusing on the same principle, which is strength versus weakness. I'd never deviate from that. That's the only time a currency pair will ever move. But again, yeah, the dollar CAD, I'm looking for a break of these lows here on the daily time frame, which are currently, if I go into the 30-minute time frame, I'm looking at a break of 1.382, and then potentially we have potential all the way down to 1.346, 1.347, around that area. I really do think we have a strong chance of moving. Moving on to the next pair I'm looking at is the New Zealand dollar. This is probably one of my favorite charts in the entire market right now. Weekly trend indicators have just crossed to the upside, so we're getting ready for a big move. Last night when I did my analysis, I did indicate that we had some New Zealand dollar strength. It wasn't dominating. It was very small. So um, pairing that with the dollar weakness that I also assessed yesterday night, now that dollar weakness has kind of come out, but yesterday night it was looking like a great um, strength versus weakness. Today, the intraday momentum did not carry into that position, so ultimately the trading plans kind of failed. You could have gotten in still, but
Mm.
you know it it might have been a little tougher to stay into that trade. The move wasn't that big, in my opinion, um, especially with what we've been seeing these last couple weeks or so. Couple days. It wasn't that great of a movement. But weekly time frame is going up. I think I'm just looking at a break of the highs again. Now, one thing I do want to caution again is the New Zealand dollar has been moving up continuously. This looks like an overextended move. This is 270 pips worth of movement just on the 4-hour time frame. It just moved up and up and up. It has not pulled back and it has not consolidated. I think now, looking at this 1 hour, we're starting to lose some juice. Just instead of pushing completely straight upwards, we're kind of moving a little bit sideways now. The trend indicators on the 1 hour are starting to pinch off, which is indicating that you're losing some juice on going to the upside. But I could totally be wrong. That intraday momentum can kick in, with some catalyst like news or something like that, and we can just continuously go. So monitor this pair. You know, if you're going to enter it on it, if you get a good reading to enter it on this pair, you just keep that in mind. You're deeper into the move, so the chances of you getting cycled out on the next pullback or consolidation are just higher. You know, you want to put the odds in your favor. Think of the markets in terms of probabilities. You can have a perfect trade setup, everything goes your way, but it might not work. You know, so put the chances on your side for things to work and work for the long term. That's what I found to be the best way to approach these markets. But after a break of those highs on the 4-hour and daily time frame, I do not have any reason to think this pair cannot come back all the way up to 0.629. I think we can take this entire move back just because, just looking at this chart, we have we have a really nice consolidation. I mean, this is a weekly chart. We consolidated for what is this, like 18 weeks or something like that, and now we have finally broken a major area of resistance. It's currently there right now, so I'm just waiting for a potential consolidation and then a continuation of this move. And yeah, judging by the way things have been going and how stable these trends have been, I think we have a strong chance of pushing back to 0.629 as long as the dynamics stay the same. Strength versus weakness. I want the dollar to stay weak, and I want the New Zealand dollar to potentially take over in terms of strength. And you know, that's one thing to also keep in mind when you have one currency driving the movement for an extended period of time. You know, dollar weakness, for example. If you have the dollar driving the movement in the beginning, and then the dollar starts to weaken or lose its driving momentum, meaning it's more so neutral now, but you have the New Zealand dollar now controlling the movement, that's still okay for a full scale aggressive entry, in my opinion, because you have to see what's pushing the movement. What currency is driving the movement? It was the US dollar earlier. Now the US dollar isn't necessarily driving the New Zealand dollar up anymore. It was kind of the New Zealand dollar strength coming in. So when you have a situation like that, that's okay. One pair takes a break, and then the other one comes in, and you know, it's you have to see which pair is pushing and driving the movement. So hopefully this New Zealand dollar strength continues. I'd definitely monitor it a little more, you know, over this week. But those were the two main pairs I had in mind. I'm going to be doing my analysis again tonight, see what's going on. You know, there are some counter trend moves happening and some reversals happening. So it'll be interesting to see if those reversals continue and potentially form new trends, or if we just fall back into the long-term trends. But right now, it's definitely a little weird period of time in the market. You know, but you know, moving on to gold. Man, gold had a beautiful move to the upside, especially on this daily chart. I love this move. You know, I mentioned earlier that when you were this deep, if you try to get in over here, you were pretty deep into the move. This was not a fresh cross. You know, even though we traded off a consolidation, we're still very deep into a weekly uptrend. You know, this pair, you know, gold has just been moving up on the weekly time frames for a very, very long time. Luckily, on the D1 last week, we pulled back. The trend indicators pinched off, and they consolidated, and then they started to point back upwards. To me, that's a fresh movement. You got into a really nice move. If you got in anywhere on this move to the upside, I would definitely be holding. I mean, I would scale out lots. You know, you moved a significant amount of pips into the upward direction, but don't be afraid to take profit. I think you earned it at this point. There's always an opportunity to get back in. And for me, that opportunity is a break of this resistance on the 4-hour, you know, at 32.46. Past there, I'd like to see consistent readings of strength and weakness on that heat map tool. And past there, you know, we don't have any historical resistance. This pair could go up forever if it wanted to. So with that being said, since we don't have historical resistance, be willing to take some profit. Don't just stay in a trade. You're up like 600 pips and you're saying, oh, I'm just going to hold it when the market dynamics start to change. And then the very next day you're out. Gold is a very
give it all back. Yeah.
yeah, you know, it's a very volatile instrument. You earn some profit, you earn some pips, take some off the table. You don't need to be that greedy. You know, certainly keep your lots, some of your lots in. That's the rule of thumb of trading. You know, once you're up a good amount of pips, put your stop loss to break even. Let the rest, you know, take some profit and let the rest ride. What you've done at that point is you've captured some money. You've grown your equity. You've grown your balance. Your confidence grows. Your stop loss is at break even. So you're playing on the house's money at this point. You're not risking anything. It's all on the house now. And your upside potential is still there. You know, as long as you're trading with the trend and you still have strength and weakness on your side, I don't see a reason why you'd want to exit. But you've left some profitability in the long term to accumulate, let the money work for you. You know, don't work for the money. You just stay in the trend and see what happens. You'd be surprised at times. You know, I've been into positions where I've exited way too early, and if I just held on a little while, I would have made about, you know, a couple hundred more pips.
Yeah.
And that's happened multiple times.
Mm.
But that's the beauty of trading on these larger time frames, is the pips that can gather, you know, long term are wonderful. So that's my analysis on gold. Is I'm just waiting for that breakout to happen
Awesome.
again. We're currently consolidating, and then we'll see what happens after that. But last thing I want to talk about was crypto, Bitcoin. So we've had some interesting moves these last couple of days. We had some pretty strong moves last week to the upside. You know, to me, these moves, it's just too hard to say whether the long term um, is going to continue upwards. I just don't know if Bitcoin will continue upward. You know, we're in this weekly range of, you know, where that first yellow line is and where the second yellow line is. We've just been ranging inside of this area. So I don't know if this pair, in my opinion, I'm not convinced it's chosen the direction to the upside. What I'm really looking for is a breakout of 88,702. Past there, then I'm looking to see, you know, I think that's a major area to break out of on the weekly time frame. Past there, I think we could potentially move up all the way back to the highs. It's just it's way too early to tell. And you know, last week when I was going over Bitcoin specifically, the trend indicators were pointing straight down on the weekly. Now they have started to move sideways. You know, if I can zoom in a little bit more, you can see the trend indicators are pointing completely sideways. I like that. Now, what I'm looking for is these trend indicators to start pointing in, you know, cross over. So the green line is on top and the red line is on bottom. And to me, that would indicate a significant change, a shift in the market momentum where I think Bitcoin would certainly be able to continue all the way back to the highs and potentially even create new historical highs. But as of right now, it's way too early for me to tell what's going on. I think if you bought Bitcoin, you know, earlier this week, or sorry, last week, I think those are just intraday moves. I would certainly be exiting. I would have probably exited uh, and took some profit and just enjoyed my weekend, or just got out. You know, I'm not convinced that we're gonna make a move to the upside and potentially retest those all-time highs. So um, yeah, I think it's way too early to tell for Bitcoin. But
Yeah,
yeah, other than
I
that,
think it's the sort of same sentiment that Walter sharing there as well. Also won't
yeah,
be, you know, false sense of this bounce, you know, that being it.
yeah,
Historically, Bitcoin likes to build a bit of a base and it takes time. I
right,
always say that it likes frustrating you a little bit, accumulation phase, and then you get that move to the upside. This
right.
is just for me too quick. I mean, anything can happen. That bounce, I'm still expecting another move lower, to be honest.
Yeah. Yeah, you know, when it's inside of a range, you never really know what's going to happen. That's
Yeah.
why I like to look at support and resistance areas and areas of consolidation, because anything could happen in that zone. You know,
Mm.
it can make weird movements. I mean, just look at it. It's very chopped up, it's choppy, it's not smooth, it's not going in one direction. This whole entire area right here does not look like this move. It's not as smooth as this move to the
Yeah.
upside here. So
Mm.
you know, your risks are definitely increased. And again, you're not really looking for long-term moves, at least not right now. I'm not. I'm
No.
definitely not. I'm just looking for intraday movement. You know,
Yeah.
whatever the intraday momentum is telling me that specific day or that in that point of time, that's what I'm probably going to trade in that direction. And that's where that heat map tool comes into place, because it also goes over gold and crypto.
Cool.
But with crypto, I like to treat it differently than Forex and gold. I like to see the entire crypto market going up before I like to make a judgment call. You know, I want to see everything in my favor backing me up. If I'm selling it, I'd like to see everything going down. If I'm buying it, I like to see everything going up. But
Cool.
yeah, that's the way I treat crypto and gold. Gold, actually, I'd never mentioned this before, but gold is a little bit different as well. Since gold is so volatile itself, I like to see gold being the driver of the movements every single time. I never really like to get into a gold trade unless I see consistency on the heat map for gold. You know, let me go on to right here. So gold, you know, you got gold against all the 8 currencies, and there's one currency, you know, against the Swissy. Swissy is, you know, gold is stronger than the Swissy because gold is on the left and Swissy is on the right. So going up, green means it's going up, and that means gold is stronger than the Swissy. So I like to see every single currency pair going in the same direction and at least above, you know, 0.3%.
Okay.
That's when I like to go into a trade. You know, if the cross currency is making the movement, is the driving force, I'm not convinced. Gold is just way too volatile for just the cross currency to take control. At least that's what I've seen in the markets for my
Gotcha.
time of trading. But yeah, that's pretty much my analysis of the entire markets. If you guys got any
Awesome.
questions, let me know. But yeah, I'll stop sharing my
Yeah,
screen.
very
No,
good
that's
stuff.
pretty cool. That's really, really awesome stuff.
Yeah, I do like those heat maps of yours. Really, really cool.
Yeah, they're amazing.
Did you develop them yourselves, or do you actually get them from somewhere else?
No, I get them from Forex Early Warning. That's where I get
Okay,
all that stuff.
cool. All right, guys, I'm quickly going to share my screen if that's okay.
Absolutely.
Right, first of all, you guys are probably all familiar with the liquidity sweep that I trade during the 9 a.m. to 11 a.m. time frame, right? That being on the NASDAQ, the ES, as well as crude oil. Now, you've probably seen all these charts now for a very long time, but there's a little strategy that I used to trade on the All Share Index here in South Africa, well, which is the Johannesburg Stock Exchange. So I indice basically. And it basically relies on waiting for the first 15 minutes or to check what the range is during the first 15 minutes. That was on the all share. Now, this can also be done. I do believe some folks do this on the NASDAQ, which I've got open right here on the 5-minute time frame. And you see this little bit of pink zone that I've got here. It's basically the New York Open 15 minutes, right? The range of the first 3 5-minute candles. Obviously, that's 15 minutes together. Then what you want to do is, you can really complicate this as much as you want to, or keep it as simple as you want to. But once you get an actual 5-minute candle that closes above or below the actual 15-minute range, then that could be an indication where the market wants to lead towards. Now, not necessarily for the rest of the day or whatever, but at least potentially, and to a very high degree sometimes, at least for a few minutes or so. So it's a bit of an aggressive type of, I wouldn't say scalping strategy, but once you get into a trade, for example, let's say the market now closes on the 5-minute below the low boundary of this range, which is currently at 1,858.
Richard, are you
You
sharing
quickly
your charts,
switch
by
to
the
a
way?
1-minute time frame and use that as a.
Richard, are you sharing your
I
chart?
don't know why I
There you
clicked
go.
on the button. There we go.
There you go. Yeah.
Now I'm explaining things here and it's not showing up. Anyway, this pink box here, now you can visually see what I was talking about, is the basic New York opening session, high and low. Not this for the first 15 minutes, that is, right? So as I was saying, as soon as we get a 5-minute candle that closes either below or above that range, so not wick below it like it did here about 15 minutes ago, but actually closes below there, then that could temporarily be a direction the market wants to head towards. And then you'll use a 1-minute time frame to try to get into a nice trade or nice area. You can either use fair value gaps again. There's a nice big one that formed over here. But in this case, I won't be trading anything with the strategy until we do get a breakout. So let's say price closes on a 5-minute below that range. This range at the moment is very, very wide. So you've got to be very careful from a risk perspective. So you can then be a bit more conservative and look for additional things like fair value gaps and try to do this. I don't know why this has gone pink all of a sudden. Let me just change that color and do something like that. So first off, if price closes below this range on the 5-minute, I can switch to the 1-minute time frame, identify an area I want to trade. Again, this range is really big. If it was a bit smaller, then I'll just hit the market order to sell and go short, and then aggressively use a dynamic stop trailing method on the 1-minute rather than setting a target. So generally, if you do get those nice little runners on the 1-minute time frame, you want to aggressively start trailing your stop as well to try and lock in profit as much as you can until you actually get stopped out rather than using a target. So that being said, here on the 5-minute during yesterday's open, obviously the Sunday open, there was quite a big gap here. So my expectation would be that if price does close below this first 15-minute range, that we might see a move towards this gap, potentially a gap fill. All right, so that's my plan over there. Onto the downside. So just like trying to build a little bit of a case as to where price might be heading if it does close below there. On the upside, though, should price close above the upper end of that first 15-minute range, around 19,116. I just want to quickly go back to one of my other charts. Then we got another level here at 19,231, which was these highs that were set here last week on the 9th, and that was on Wednesday last week. So that could then potentially be another sort of level that price might be gravitating towards. So happy to play with that strategy, either up or down, but again, looking for confirmation from what price action is going to be doing and where it's going to be closing in or out of that range, that 15-minute range that formed between 9:30 and 9:45. So that's what I'm looking at on the NASDAQ today. I particularly like doing this on the NASDAQ. Again, just this little day trading strategy. If you look past at previous days, and I don't know why it's not loading there properly again, but there is quite a lot of instances where you can get really nice runners, especially if things are volatile. But again, you have to very aggressively manage the strategy by trailing a stop loss and so forth on a 1-minute time frame. Because if you're going to get whipsawed in and out, just rely on which direction actually the candle's closing according to that first 15-minute range, you really need to be sharp. Get in very tight stop and aggressively manage if price does go in your intended direction. Right, so that's what I'm looking at here on crude oil. Let's just switch back to that. Price did make a little high during overnight session, moved into my time window, and it is currently approaching these lows that were set during yesterday's open, Sunday's open. So that being at 60.55 and a little cluster of lows here around 60.60. So should price, in this case, again, just following that other strategy that I like trading, price sweeps that and we get a reversal, then I'll switch to the 1-minute time frame and see if we can get a fair value gap and use that as a trade entry location. On the ES, we got a multitude of lower highs in this situation, and actually highs that was set here on the 9th, also last week, Wednesday, around about 5,492. That price might also be gunning to the upside. Same thing here yesterday during the Sunday open. we had a gap that formed there. So if we do break below this current lows, then I think that could potentially be an area where price might be gravitating towards. That being said, it's not necessarily, as you guys know, if there's a gap, it's going to be filled on the same day or the day after. It can take days or weeks sometimes before a gap gets filled. Right, so that's what I'm looking at. Again, with the NASDAQ here, going to be a little bit more aggressive, see which direction price breaks out of that first 15-minute range, and then try to go in that direction, aggressively managing my position. If I can get into at least an area where, that I find, would be more, how can I say, less risky. Because the range we have currently here on the NASDAQ, that first 15-minute range is quite high. If I get short here, if price goes down, and I place my stop all the way in the top here, you probably won't be able to do that depending on your account size if you were trading futures or even the micros maybe. But since I'm trading the CFDs here, it will be possible to at least, control the lot sizes to do that. But we'll see. Price could also muck around here in that range for the longest time, maybe even extend beyond what we have before the next trading session starts with our guys at Hola Prime. So that can also be a possibility. So just for the few days ahead and going into next week as well, I'll be looking at this a little bit more often, just trying to get a few more trades out for the viewers and see how that goes.
Nice.
All right. So that's me. Did you ever get that bounce on gold that you were looking for, Walter?
Let me just take a look. I think it's getting there. My price alert hasn't gone off yet. Oh, it did bounce, but I'll just share my screen actually. One second. There we go. Voila.
There we go.
Yeah, so price did trade into that area of interest, which is this order block. And it looks like it's rallying, but this is not the trade I was looking for. So I like to look for confluence, right? So not just a blind trade into an order block, but like trading into the order block, but confluent with, so this is a imbalance of fair value gap right there. So if the market obviously gives that sort of like deeper retracement, I do prefer to see like 3 bullish candles going up into that area. And also I believe there was a let's take a look. Well, let me just turn my EMAs back on again. There we go. It wasn't on this time frame. Yeah, there we go. It's on a one minute time frame. So there was the 1 minute 800 EMA also sitting in that imbalance as well. So there's a lot of confluence in this range. So I'll be a lot more confident selling if price were to give that deeper retracement into this area and potentially retesting that 800 EMA that likes to act as a dynamic area of resistance for price, as you can see. So and then Bitcoin made that a nice move down. It's more than 50% of its way into my AOI, not quite there yet. But notice again, price came down, created this relative equal lows. So yeah, most likely price will break below those lows before we do see a bounce up. So yeah, I'm very confident about this continuation to the upside. Right now, it's just waiting for price to give that move to the downside, and then from there, I will be looking to engage in the long. So yeah. So gold and Bitcoin are making movements, but right now, not the movements that I'm looking for to motivate me to risk some money, So yeah, so at this point, it's just waiting for the right setup to show up.
Yeah, that's the name of the game. Just patience. Gotta wait until the opportunity.
It is.
You can't really chase it. Yeah,
exactly. Exactly. You should never chase. If you ever find yourself in a position of of chasing price, then you're no longer trading. You're now moving into the realms of gambling. You should never chase.
Yeah, absolutely. Don't get yourself into unnecessary drama. Trading is already as hard as it is. Just wait, sit on your hands. There's always an opportunity around the corner. So
agreed.
Exactly. Yeah, there's always something coming up. This is why it's like, for me, like there are 3 sessions in a day. There's London, there's Asia, and there's Asia, London, New York. At least one of the sessions is bound to give me some sort of a setup. So that's why it's like, if I don't see something in Asia morning, Asia open, I look in London. If I don't see something in London, then I'm fairly confident I will see something in New York. But there are days like where there is no setup whatsoever. Like last week, I had one of those days on, I think it was Thursday, and that's okay, But it's just saving those bullets for when they're actually needed, and then and at least you have ammunition when something good finally comes along.
Yeah.
But yeah, it's a very interesting time for both like gold and Bitcoin, because it's like right now with gold, I do see one of two things happening. So last week, yes, like the long was anticipated from this bullish order block on the daily, which, take a look on the weekly, coincided with price trading into this weekly imbalance. So very naturally, price traded, bounced off that imbalance. So from an area of sell side, went into an area of buy side above this high. So I'm very curious to see how this weekly candle will close. There is a part of me that thinks this weekly candle will close as a rover track, meaning it would trade back down into the range and close at around last week's open price. If that does happen, then for me, that is like a major confirmation towards a potential correction to gold, that we could see gold trading all the way back down to maybe around like 2,500. But if we see a very strong weekly close to the upside, that is a very strong confirmation that, again, we are potentially going to see, gold climbing to, the next major price for gold right now is $3,500 right here. All right. So that is the next major price. So if we see a strong close, we are most likely going to see gold get to 3,500. But for me, the big question is, are we going to see gold at 4,000 before the summer? And if we do, that will be absolutely insane. Right now, it's climbing too fast. It's very scary. It's climbing way too fast. But yeah, we'll see what the market holds. And even Bitcoin is the same. These equal highs are very juicy. For me, I hate when I have very clear targets, because sometimes it's like price would eventually hit that target, but the path to that target is never a straight line. Sometimes it's like a very weird zigzaggy line. But yeah, so it's like at least there's the ultimate target, but between where price is and that target may not be a smooth path to victory. So yeah, so sometimes it is, sometimes it isn't. But when it is a smooth path to victory, the setups are not always the easiest to get. It sometimes happens in like the times you least expect it, and then it flies to your target.
Nice.
Yeah, crazy how that works. Also, like you said, there is like just been around for quite some time. You got a really good feeling or know the probability of price, reaching or taking out those levels are really, really high. But yeah, obviously the difficult part about it is like, when do you enter? And then expect that.
It's like the entry is like not like the entry is pretty, like, especially within context of time, right? It's good to get, it's easy to get those entries, but the challenging part is knowing when to hold. So I had like a very similar situation happen to me. I think, was it last week or the week before? It was right here. I'll show you. So this was a very frustrating week at that time when this happened. So it was in this situation actually. So yeah, so like I remember this very clearly, right? So this bullish channel was created, and then at the time I had a very, very clear target that price was going to take out this high, super clear. So I remember like on Yes, it was on this day. So it was on a Tuesday. All right. So I remember on the Tuesday, I actually got a long position down here. All right. This was during like towards the end of Asia session, going into London session. I was able to get a long position. My target was this high. So I was like, I had a very clear target in place. I had a very nice entry towards that target, and the market seemed to be rallying. But then, as you can see, what happened? Price came all the way back down, and then I got stopped out of this trade because I was like focused on price taking out this target. And then that was my day done. Next day, I woke up, and price was like all the way down here. I'm just like, what the hell is going on? And then before I know it, look at what happened.
Wow. Yeah.
and and this happened in a way that I could not like. There was the cycle in place and everything, but the second part of that cycle, the second leg. So remember, I usually only take trades after the second leg has confirmed, and then I take the continuation of that. Right, but the second leg was the leg that broke above that high. So yeah, so when this happened, I just gave my screen a big middle finger because I'm just like, look, man, I wanted that target. I wanted to hold a position to that target. Yeah, you denied me that opportunity to the very last second.
Yeah. Man, that that's the worst when that happens. You have a perfect
Yeah.
plan in place,
Gut
and then,
punch.
yeah,
Jesus.
gut punch. It's a perfect way to describe it.
Everyone's got a plan until they get punched in the face by the market, and then the market is like, I have a better plan.
Not just Mike Tyson, but the markets as well.
Yeah, exactly. But yeah, good times, man. Good times. But
Yeah.
I like the way you analyze the market, and then the way you look at the market is actually very similar to how I analyzed the markets a few years back because I started off trading FX, all across pairs, and I
Yeah.
would look at cross pair correlation as a form of analysis, and I would also look at correlated strengths and weaknesses for both the majors and of course the minors as well, and then that would actually give me and then I would obviously do technical analysis on top of that to get an indication of trend direction and all that kind of stuff. So it was very nice, like when you showed your spreadsheets, that really brought back some memories because I had something very, very similar in place for pretty much every single FX pairs, majors and minors that I was looking at the time. Um, but
Nice.
yeah, so it was really cool to see that again, like to see actually that someone actually uses that form of analysis. It's a very, very heavy form of analysis, like requires you to actually like, you have to do a very heavy analysis, like start of the week, which usually carries you over like the next few days because you're only looking at 1 hour, 4 hour, which is amazing. But then you have to kind of like be on the ball every single day to ensure that you're not missing any majorly correlated moves.
Yeah,
But yeah, like when you get those moves, you can get some big runs.
definitely, definitely. Yeah, I mean, it's proven itself to work in every market condition. Actually, the only
Yeah,
market condition, this type of analysis does not work in is when the markets are chopped up. When you have a bunch of no
yeah,
trends. So, when I focus
Yeah.
on 28 pairs, and when about half of them are just consolidating or going sideways, that heat map tool, all my analysis, it doesn't mean anything. It because the moves are just too unstable. You have the no trending situation on half of the market. The half of the market doesn't have a
mm,
direction. When that happens, that's where you
Mm.
really have to sit on your hands and drill down those charts daily. I mean, maybe 2 times in a day if you have to, and the market will start to give off signals. Either it being, when you're in that situation where the market's just no trends everywhere, what you got to do is go into chart analysis mode. Your trend analysis has told you there's no trends available. Now you go into chart analysis mode. Look at what's going on with each currency group. So if the US dollar pairs are all showing no trends, but they're now all approaching a major area of resistance or support, that's an indicating, the market's indicating a potential imminent move. You better pay attention to that, especially if there's news coming out that can break, that can serve as a catalyst for it. News is always a fantastic way for these markets to shake themselves out and pick a direction. I I love to trade news. The only thing is never trade news before it actually comes out. I see a lot of people. I've been guilty of this
Yeah,
myself,
there's
where
a big
Yeah.
difference, right?
I think it's common sense, right? To wait until after the noise to
Right.
trade the after effects of the noise. But I think sometimes it might be counterintuitive, because I think sometimes people think that the news is where the money is, but really and truly the money
Yeah.
is after the noise is cleared. Because
Right.
the main thing that trades the news these days are algorithms, algorithmic programs with a lot of major firms and banks. Those are the things that specialize in trading news on the microsecond level. So there
Yeah.
is no more edge for any retail trader to trade the news. Zero edge. Like
Right.
these algorithms are chopping up every single news opportunities, that there is nothing for retail traders. And the best thing to do is just to wait until the news is done.
Yeah. I'd rather you go to a casino. That's better
Yeah, for
than
sure.
trying to
Right,
sit here,
right.
Yeah.
trying to get a few pips off of news. But yeah, when news comes out, I like to wait a minimum of at least 10 to 15 minutes before that, so that spike can just calm down and build some sort of consolidation on the 5-minute chart or the 15-minute chart. It depends. After that, then I like to see, is the momentum going to continue moving in that same direction? And
Hmm.
based off of the momentum, I like to look at the higher time frames. What's the overall condition of the market telling me? Is it choppy? Or half of the pairs not trending again? If the market's perfect, we got a lot of trend
Hmm.
available, and this is a trend continuation, that's a perfect opportunity. Earlier this year I had another massive trade on the pound yen. Those I think it was non-farm payrolls. A lot of people don't like trading on non-farm payrolls. That's probably one of my favorite days, because the volatility is just so high. I waited until the news came out. We had a pretty small price spike. I think it was about 40, 45 pips or something like that. Then we had yen strength come into the market. I sold the pound yen, and over the next 2 or 3 days, it was up 400 pips. It was absolutely beautiful. So got my stop to break even. One thing that I will say with these momentum based trades, I am never managing a losing position. And what I mean by that is when I've entered into a trade, I give myself about 30 minutes to an hour. And if that pair starts to, even if it's within the first 10 seconds, if that pair starts to reverse or show some type of pullback, I'm out. I'm too scared to hold it at that point. Even
Yeah.
though my stop loss, even though I have an initial stop in place, my stops aren't close. They're like 30, 35 to even 40 pips away on more volatile pairs. I'm putting, this is where you manage your risk. I got my stops in place.
Hmm.
They're a good,
Mm.
they're good distance away from the market, at the point of entry. So that allows me to, just in case there's some unseen, unforeseen news announcement, which has happened before. There was, when the yen pairs, when Bank of Japan intervened, I got into a
Yeah.
trade, and luckily I had my stop in place. And the very second, oh my god, I couldn't even believe it. The very second I clicked on buy, Bank of Japan comes out with a news, intervention, and my stop loss was hit within the first 10 seconds. And I
Wow.
think it was like
That's
5 seconds
crazy.
into that trade. Yeah, that's why I have stop losses in place. I'm not looking to get stopped out every time. It's just in case those events happen. Yeah, and they will happen.
Yeah.
You just have to
They
protect
will.
yourself. So
They will happen one day to anyone, to everyone.
right.
Yeah.
Right. And going into when I enter into a trade, I want to be positive immediately and get my stop to break even as fast as possible. Any sort of, even if it's a first 5 seconds within the trade and I see it starting to reverse, I'm like minus
Mm.
10, 15 pips at that point, I'm out. I don't want to be in that trade. And I give a trade about 30 minutes to about an hour. I want to be in positive. Being in positive 15 pips for an hour is different than being negative 15 pips for an hour. At that point, you get out the trade. You're not. It's not working for you.
Yeah, psychologically, it's definitely a very different toll.
Yeah, right. Get into positive pips immediately. That's why intraday. That's what intraday momentum allows you to do. That's what that heat map allows you to do. You got money on your side. It's backing you up at, at the point of entry. Make sure it's backing you up, throughout the trade. You don't want it to
Yeah.
just all of a sudden fizzle out. Now you're just managing a position. You don't have an edge anymore at that point. get into positive pips immediately, stop to break even immediately. Then you can take a break, make breakfast or whatever. But yeah, I don't really like to stay in a trade that long.
Yeah.
If it's negative, I don't manage losing positions. But yeah, I mean, if anybody else has any questions in the audience, please ask. We rarely get questions, so it's
Things
nice
are a
to
bit
always
quiet sometimes on Mondays, right? So yeah, I've been trying
Yeah.
to get this strategy out and see if something can happen. But now, since I've discussed it, prices went sideways. Obviously, can't control the market, so I don't really have anything to show here.
Yeah.
Look at this. This is just bouncing up and down.
Yeah.
Not a good. I mean, this is obviously a no trade zone. It's like this high to this low. Very unpredictable price action. If you're trying to buy here, you could get shocked high if price comes back down. If you're trying to sell, same thing. So yeah, so right now, just sitting on my hands for this. And then this again, just waiting for the potential, fingers crossed, of this swinging up just a little bit higher. Just a little bit higher. And then I will most definitely engage in this to the downside, because the risk reward on this from there will be really good. We're looking at what? Let's see. I prefer from the AMA itself. Stop goes away, and then target is that 1 hour low. Not bad, not bad. So 1 to 2, add to the 1 to 4 from earlier, and then there's the 800 EMA to the down on the 5. 15 is still a bit far away, all the way down here, and then 30. Yeah, I think the 5 is the most reasonable one to aim for. 1 to 2. Yeah, not a bad R to R. Not a bad R to R. 1 to 3 best. Looks like it's coming back up now. Yeah, I mean, today's Monday. It's like, this is one of those weeks that will move good. So I think like Tuesday, Wednesday, Thursday this week would be very nice.
Yeah.
But at the same time, like obviously with Friday being a bank holiday.
Yeah.
Yeah, before Good Friday.
So Walter, I'm curious, when you enter a trade, what are your stop procedures? Like, what are your initial stop procedures? Like, what are you looking for to set your stop loss?
My stop loss always goes at the high. So I always take a trade from an order block within context, right? So either a 15 or a 30 minutes order block within a context of a pre-established trend direction. And then my stop loss would always go above the order block or below the order block, just by a few pips, because the market could like wick just a little bit above it. So I always position it above it or below. Entry wise, so my entry is based on 2 things. Number 1, of course, price needs to trade into my area of interest. And number 2, I usually look for a confluence of some confirmations within my area of interest. So like in this case, for example, fair value gaps or what I refer as imbalances within order blocks is 1. But also an 800 EMA. So 800 EMA is a very good, acts as a very good dynamic area of support and resistance for price. So price would usually gravitate towards the 800 to act as a magnet, or it's repelled by the 800. Don't ask why. I don't know. It's just the behavior of price that I've noticed for a very long time. So I just utilize it with my analysis. So if I see the 800 EMA, for example, within like a fair value gap or within an order block, that for me is also a good confluent for an entry. And then in terms of when I actually pull the trigger, so what I like to see for the majority of my entries, so I'll show you like the one from earlier today, is 2 things. So just, yeah. So like in this, like for this one is set up. Area of interest was this bearish order block right there. right? So we saw that the market had already delivered that second leg to the downside. So this bearish order block was an area of interest. But I don't just simply enter at the order block, as you can see. So the first is time. So I usually look for a trade within the first 3 hours of session open. So I start trading during. So I live in Asia. So I live in Bali. Currently, I'm in Hong Kong right now. So and gold is very active in Asia and London, more so than New York, surprisingly. But this is the behavior it's been for the past year. It hasn't always been like that, but recently that's what it's been like. So yeah, so the first 3 hours, I wait for the market to trade not only into the order blocks, like in this case, the confluent was A, order block, B, short-term highs, but also there was this fair value gap as well. I will look for something known as a V3. So it's like 3 vector candles. So it's like boom, boom, boom. So it's like an acceleration of 3 candles within my area of interest. So when I see a V3 like this, 1, 2, 3, vector acceleration during the session open, taking out short-term high, trading into fair value gaps, that for me is like the big thumbs up of getting on this trade. So I want to see fast price action. So one thing that these guys, because they've seen me trade live in the past, is I tend to trade into fast price movement, which is for obviously for some traders that's a very scary thing to do, right? But for me, that's where the opportunity is. So I look for like stuff like this, but I look for free candle movements into my area of interest, and then literally as soon as the candle closes on that third vectoring run, that's when I pull the trigger on my shorts. So like in this case, I basically went short around this area. My stop loss goes always above the high, right? Always above the high. And then, my entry was like down here because I hesitated a bit. I was like, I want to see the market pull back into the order block. And as soon as I started pulling back into the order block, that for me was my entry. That's where I got a 1 to 4. But if I'd entered immediately at the close of this candle, could have gotten a better RR. But either way, this general range for me was like that, where that third vector accelerated run traded into, and that was my entry confirmation. So I don't like trading into slow price action. I prefer trading into fast.
Sorry, that B3 move that you look for. Is that specifically what you look for?
V3.
The B3.
No, V3. So V for vector.
V for vector. I see. Okay. Do you follow that in like Bitcoin as well, or is it very like something you commonly see?
Yeah. So V3
only.
Yeah. So V3 also in Bitcoin as well. So not just gold. It's definitely more common in gold during the key difference with Bitcoin and gold is usually only active during the first 3 hours of London, Asia, and New York open. Between those times, it's just consolidated, right? So that's why it's very easy to see when the market vectors, because it usually is just a sign that the market is waking up and it's getting ready to do something. Whereas with Bitcoin, I don't always see the V3, so I don't necessarily look for it all the time to happen, because Bitcoin is active quite a lot of the times, especially when we least expect it. So, like for example, gold might be dead by 1 p.m. New York time. Gold might just be quiet, not doing anything by that time. But Bitcoin could be super active at like 2 p.m. New York, for example. So yeah, so still within the first 3 hours for me is the most optimal. Bitcoin sometimes vectors, but with Bitcoin, I'm just happy. So like why I like trading Bitcoin is like stuff like this. When I see ranges form, I'm very happy as long as the market trades and closes. So when I say close, I don't want to see a wick. I want to see a very bearish close out below this low. As long as the market trades and closes outside of this range into the order block, I'm getting in on that. Right.
Gotcha.
I don't want to see a wick. The reason being is because with a wick, it could just be a continuation of that accumulation. So like for example, so the last trade I took on this was last week, Friday. Was down here. Yeah, it was down here. Just find that setup. There we are.
Yeah.
So like with this, like the last trade I took on this price, so it was right here. It's not so clear to see. So price gave that full bullish cycle to the upside, right? And then after that full bullish cycle, it kind of like it gave that vector to the upside. It came back down, and then after that, it began to give a new bullish move. So this is actually 1 on the lower time frame, and this is 2. So in this case, this was the area of interest down here.
Okay. Well, yeah, spiked down quick.
And then this gave 3. So yeah, so this gave the entry was even before the spike candle. This was just the teaser of trying to get me out. This is more the entry. So it's like 1, 2, 3.
You specifically.
So when this is the reason I don't move stop loss to break even because of random shit like this. That's why I always leave my stop loss where it is.
Exactly.
But yeah, so it's like 1, 2, 3 down into my area of interest. Right there, right into that order block. So again, it's like with something like this, as long as the market is just giving me that move into the order block, I'm happy to enter off that. My stop loss goes below the order block, and that's it. That's all I need to do.
Gotcha.
And then and then with this one, I just held it to this high right there. So this was my area of interest for taking my profit.
Nice.
Yes. So that was the trade, right? But yeah, like this is the reason I don't do stop loss to break even, because obviously after this shift candle, it's easy to think, oh, let me protect my bottom line, but then the next candle comes and stops me out. So that's why like I always leave my stop loss where it is. I just give enough room for price to breathe and do these things. Yeah, it happens quite a lot, more times than often, and stuff like this to screw up your win rate. Because what could have been a profitable trade becomes a losing trade, and then let's say that you have like out of 10 trades, like 6, 7 trades, 5, 6 trades are meant to be profitable. It really messes up your win rate, because your profitable trade becomes losses, and then you end up accumulating more losses, and then you end up like ending the week in a drawdown.
Right.
Yeah.
So that's why like I find leaving my stop loss where it is just actually it's more beneficial for me in the long run than when I move to break even.
Nice.
Yeah, so this looks like it might give a bullish break to the upside. Very typical.
Oh, so
All right, gold is moving nicely into the area of interest. Any updates on your end, by the way?
I don't know. I'm still stuck in a range here. Well, the NASDAQ is. We only have 10, what?
Nasty.
8 minutes to go before we have to finish things off here. So, guys, any questions from the viewer side? It'll be greatly appreciated. Otherwise, I think, Walter, you're the only one that's actually close to a potential setup there. But still, you still wait for the 15 minutes candle closes and stuff, right?
Yeah, of course. I have to. I wouldn't just take anything prematurely.
Yeah.
It's surprising how much pound dollar has been rallying. It's
yeah, it's been
not bad at all.
Crazy. Especially on the larger time frame.
So right now, what are you looking at on the higher time frame then? Are you looking at this being bullish right now in the long? Because obviously it's sitting in an accumulative range as well on the monthly time frame. So it's a very big range, but
very
for the pound dollar, right?
Yeah.
Yeah.
Yeah, I can. Yeah, I'm just waiting for it to break the weekly highs, or the daily highs. I'd like it to consolidate a little further before I consider a buy on it. Currently, there's no pound strength on the larger time frames to back up my entry, but there's some still lingering dollar weakness. So I got to see which currency is going to drive the movement, and then at the time of entry, using that heat map tool to get into that long position. So ideally, I want it to consolidate more on the 4 hour. It could break out of there, but I really want to see a consolidation and then a break of that on the 4 hour at least.
No, which will make sense because it's been a sort of an extended move to the upside.
Yeah.
So you want to ensure that at least there's enough liquidity build up to sustain
Right.
either a bigger run to the upside or at least a similar run of the same length.
Yeah, exactly. You know, the larger the move, the larger the pullback, or potentially the longer the consolidation. So I just don't know what's going to happen.
Yeah.
Too early.
Very strong pump to the upside there.
Yeah.
Yeah, very strong moves.
We were watching this a while back. Price big stuck in that range. We just had that little pop to the upside, bam to the downside, and now we're back to the topic.
Yeah, right.
And then even like the Dixie, so the dollar has just been, like, I mean, I know last week there was the brief corrective movement as a result of the Trump's obviously tariff situation. Yeah. But after that, it's just been continuing to the downside, and it's now obviously traded down to the low of this range down here. So price is now sitting on an area of support, and this is the high of the range. It's pretty interesting actually, because the dollar's just been complete dollar weakness for 3 consecutive months now. 3 consecutive months of dollar weakness.
Yeah.
Oh, look at that! Bitcoin is giving a break to the upside. All right, this is good now. So yeah, at this point, what I want to see is a new high being created that doesn't trade back into this previous range, and then I'll be anticipating a retest of this order block, and then I'll be looking straight to continuation from that.
Cool. I think before we go, I'll quickly show my charts again, if you don't mind.
Yeah, of course, go for it.
Again, there's that 15-minute range. We just ran sideways here on the NASDAQ. So probably after the session, we might have a breakout above or below there. Yeah, same thing with crude. Well, SPX sideways. Where's my other crude oil chart now? Same thing here. We've been a little bit of a consolidation there. So not much movement, guys. Nothing I can do. I'm not going to force a trade. So at the very least, like I mentioned during the week coming, if I can see any breakouts out of that first 15-minute range, then I'll be happy to trade that on the NASDAQ. But yeah, you will get days like these. Got great grand plans, and then the market just does what it wants to, right?
Yeah.
Run sideways. Don't force anything. Don't chase anything. Don't go make silly mistakes and, trade outside of your plan, which a lot of traders do. And they get caught up in the sideways movements. Get frustrated. So, yeah. Are you guys back on tomorrow morning again or during the late session? Because, Walter, you probably have to be in the morning session being in Hong Kong, right? With your time difference. Now it's quite late.
Yes, I'm back. I'm always on at this time on either Monday or Thursday.
Okay.
Yeah, I should be on tomorrow and I think Wednesday as well. Morning session 1.
Okay. Yeah. Any questions from our viewers' side? Now's the time to ask. We've got a minute or so left, I believe. And then
these questions only help you. Remember that. You don't ask a question
Monday, unfortunately, but that's just the way it is.
Yeah. If you don't ask a question, you're just putting your you kind of losing yourself. You know, these questions only are going to help you. So we're good. It's just they're going to help you. So don't be afraid to ask.
I see what I think the equities or the stock market closes on Thursday at 4 p.m. Eastern as well, in observance of for the following day. So I think hopefully we get our decent moves occurring earlier rather than later during the week. Right, guys, I think time's up.
All right.
Thanks for joining. Nice seeing you guys again.
Yeah, good talking to you guys as always. Walter, it was great meeting you. Hope you come on.
Likewise. You too, Nandan.
All right,
sorry,
guys.
No doubt. Nice seeing a new face.
Before you go, Walter or Nandan.
Yeah.
Our good friend Robert's been with us for quite some time since we started hosting these sessions. He asks, what did you tell yourselves when you used to struggle with not breaking your rules? Yeah.
Wait, when you used to struggle with not breaking your rules or struggle with breaking your rules?
Probably breaking your rules, I would say.
Yeah.
Discipline, obviously, a major important part of trading, Robert. And I guess it's just, for me personally, I've been so, how can I say, and I'm not just interested in trading from when I started, but, you get into that journey when you actually start seeing results after actually starting to work on those bad habits that you've built from in the beginning, then that sort of, helps keep you in check, because it depends how much pain, and normally it's financially wise, that you went through. That was, the cause of these emotional issues that you have, or ill discipline, as you call it. I just basically went, a few times actually, wanted to throw the towel in and just look myself deep in the mirror. I even had support from the family side, my wife, and said, listen, if this is something you really want to do seriously, you need to start really working on these things that's stopping you from getting there,
Wow.
And,
Nice.
and it's not just a quick thing like that. It's a process as well. So I think having a good support structure as well, speaking to other traders, speak to us, ask questions, like you just did right now. It's a good thing. Trading on your own can be a very lonely journey as well. So, that's why I really like this sort of format that we're doing here too. Ask questions to people that's been trading for a while, learn from them. And I mean, like I said, it's just a journey. It's not going to just happen overnight either. It's difficult. Anyone that tells you trading is difficult, and especially the emotional side that goes with that, it's not easy. So, we're always here to help. Ask those questions. I mean, you guys will probably have similar sort of views, maybe just a different experience for how you got where you got. But for me, it's just really had to go sit myself down after many years of basically just messing things up because of myself, and not really the strategy that I was following. You have to get real with yourself at some stage. You have to change, and if you can't do that, then maybe it's time to do something else.
Yeah, have a trading system that's adaptable to all the markets. And I'll be honest, some of the best trades I've ever taken are because I've broken a rule. But don't ever deviate far from your rules. So if you're gonna break a rule, understand why you're breaking it. Understand, what the results of it could potentially be. Accept it before you do it, and keep a clear mind. Risk less. You can break your rules, risk less. There's not, you don't need to risk the same amount. But just don't deviate from your rule set too hard, or else you're gonna pay the price. You will pay, I promise you. And you'll get to a point where trading is gonna kill your emotions. It's gonna happen at one point. So risk less. Don't deviate too far.
Absolutely, I agree 100%.
Yeah, and I agree with what Richard said. It's gonna happen, but make sure you're in front of the charts every day so you can build the experience.
Yeah, for sure. Cool. Right. Hopefully that helped you out, Robert.
You both couldn't have said it any better.
Yeah.
Awesome.
Yeah.
Right. So, don't want to add anything, Walter? I think that's it. Should we call it a day? Yep.
Yeah.
Cool. Thanks very much, everyone. Thanks, Robert, Walter, Nandan. Nice seeing you guys again.
Yeah,
hope to see you
likewise.
again this week sometime. Have a good rest of
All
your
right.
day. Till next time. Cheers, guys.
Thank you.
Have a good
Cheers.
rest of the day,
Bye-bye.
guys. Until next time.
Bye-bye.
Bye-bye.
Hi, Paul.
Hello. Still got some background music. Can you hear that music still?
Yes, I'm trying to. I'm today moderator.
Nailed it.
Hello.
All
How
right.
are you today, my friend?
I guess you're hosting. I'm good. How has your weekend been? Any interesting setups?
Small someone, but nothing special. Today is just preparing for the week.
Yeah. I got an interesting short setup which played out to the extreme. I'm kind of joking, but we can talk about that a bit later. It was something crazy happened with Mantra over the weekend. It's lost 5 billion in market cap in like an hour. So we can look at that a bit later. But what do you want to start with?
Hello, Aymane.
Fine.
Hello,
yeah, of course.
hello.
Aymane. I knew we were waiting for
How
somebody.
are you, my friend?
I'm good. And you? How are you doing? How was your weekend? Paul, Igor.
Nice.
Good.
Be nice. Warmer weather today.
Yeah, it is warm. It is warm. Exactly. Any opportunities, or this is just the start of the week, Monday, chill?
But we were just saying that one of my crypto setups had a bit of a crash, which is now providing a wonderful long opportunity.
Oh.
We can look at that a bit later. But who wants to start out of you two?
Let me start. Maybe I can start just a little bit introduction for today. I will just share a screen about just to show I hope that you will see very soon. So today is, as you can see, day without some special news, and I will open right away this week just to see what can see for this week. And the most important thing this week is CPI for CAD. We have that at Tuesday related to the news. CPA for British pound early in the morning. And this is something that I want to watch because I like to trade British pound dollar. And this is something that I will watch the whole week. Related to some speak, we have the Fed Powell speaks at Wednesday, and this can be yes, this can be interesting too. But what is the most important thing is, I just want to say, based on last 2 weeks, is that this news, the whole month of April, very small impact on the price. So several times during all these sessions, I realized something really unbelievably. So we had, for example, so better than expected news of GDP or something like that. In that moment, that news, no impact at all. And it was something that I didn't see very long time. So this is the something that I need to watch. I need to monitor. But like I said, I think that this US dollar push is a really how to say, it's really a little bit unbeatable. So what I want to share here too, it's one trade that I took today. I will just show that trade right now on the platform. I will just very fast, nothing special. Just to show you first, maybe on the trading platform right now. So this trade is a trade which I took after the small pullback. This is the only thing that I can describe that. It's a really small pullback that we have for British pound dollar today. I will just show you the trade. So the trade was this pullback was around level 1.313. This is the huge pullback that we had today. I say huge because for me, 70 pips to make in less than an hour is a really good pullback. But like I said, the very volatile market in last couple of weeks, this is nothing for the 200 pips or more that we had in last 2 weeks. So I will just describe why I did this trade. It's because today we opened our session, like I say, Asia session at level 1.307, and after that the market started to go up. So the whole Asia session we were up. In the morning around 1.31 level we had strong push 100 pips. So we push 100 pips the whole Euro session, and at 1.32 we started to go down. So what I did just a simple Fibonacci retracement here, a small pullback. So somewhere in the middle, 50% Fibonacci retracement. I saw the reaction there, and right now I'm 50 pips in profit. So I will just I didn't did that, but I can do that right away. I think that it's a time to move my stop loss a little bit. I can put it on the like this on the 3135, and the take profit. I will take the first profit somewhere around 1.3215 because I want to see the new high. I want to see the new high, and this is the way how I just think about British pound dollar. And the logic in for today, my logic is that euro dollar went to 1.14 last week, and it was the highest high that we saw since I think 3-4 years ago. It was the 22 or 21 we had that high. So if euro dollar can achieve so high price, I believe that British pound can go realistically even above 1.34, which was the October high. So just the logic of the all currency pairs, major currency pairs, I think that each currency pair can be in some ultimate high without problem, because the euro was on that ultimate high. British pound, Aussie, Kiwi, everything can. So maybe later I will show all that setups. I just wanted very, very short to show this trade that I took today. And I think that we can see maybe push higher today, maybe about 1.32. And this is why I need to be cautioned here, because last time when we had this 1.32, we had rejection, and we know what's happened then. We had a pullback up to 1.27. So this level is a little bit strong, and I really need to watch this level here, 1.32. So everything can happen. Nothing in trading is 100% sure. Even this trade here. So I don't know what will happen, of course, but I think that my position of the buy trade is very good. It's a really I think a really good low here. So I think that we maybe can achieve some new highs today. One very important thing is to know today is Monday, and Monday is range. So Monday's range sometimes can be a little bit boring. So in Mondays, we usually don't have a weekly low, weekly high. So that can happen today, that we just stop at 1.32 and wait new days. In that case, this trade, I will close my trade. I will not keep this trade very long because highly volatile market, and because I have a good price, I will just wait a couple hours. If I see that market just reject 1.32, I will close my trade with a small profit, and this is the whole story. So this was just a fast thing just I want to share with you, and later I will talk more about some things that I just want to show you relating to the technical analysis. And now I would like just to remove this, and I wait to see what Paul has to say.
Whoa, you sound like I'm going to be critical. What are you talking about?
No. It's because of that. Because I like when I see some moves in crypto market, because it was boring things related to the crypto, and I'm waiting to see something new there, just because of that.
Yeah, sure. We can definitely get into we can definitely get into what's going on in the crypto market. Aymane, what's going on with you?
Yeah, so I will start by, let's say, a quick recap of NQ, what happened last week, and then I will talk about my plan for this week, if it's okay. I will share my screen.
Of course.
Have you got anything to critique Igor's trade? Anything you want to destroy about?
For me, like a Monday starting a week with a win, it's amazing. So
yeah.
So
Monday support buy. Love it.
Yeah. Because I can assure you, Igor, that a lot of traders lost a lot of money on Monday. That's why I don't trade.
Mondays and Fridays are really bad for trading. But sometimes if I see that I can get the right price, I like to enter in some trades during the Mondays, because sometimes market just the price come to me sometimes, like this time. So here you are, your screen.
Yeah. So it's interesting what happened last week, like in the market. So it's again like everyone was expecting. So we opened with a gap of 2.3%. So everyone in the media, in the news, everyone was expecting, like, let's say, a Black Monday, because I was watching the news, and when they saw the Asia open, everyone was saying we are going down, we are melting down. And guess what happened? We form a support in this, let's say, in this weekly area, daily area. We form a support, and no one was expecting this to happen. We create here a small double bottom. Of course, like, in my opinion, like, no one could buy here after all this move. Small double bottom means nothing in this bearish market. So one pattern also I want to talk about, like, I saw it happen, I think three times out of 5. It happened on Mondays, Wednesday, and I think Thursday. So we create the low on Asian session, and on NY session we have continuation. So you can see here, like, everyone was expecting a Black Monday, create double bottom, and then create the low of Asia here. On NY session we had continuation, and we had some serious move. For me, I thought in the beginning that I am trading penny stocks because I saw like some 10% move, 6% move in a couple of candles. So here it was like they said it was a mistake of 90% pause of the tariff. So it was a Monday, it was in this candle. So we had like let's say approximately 7% move to the upside. Here, someone from the White House announced that there is a 90% pause, but after that they denied that it was just a mistake. So who knows? It could be market manipulation. We never know.
You know what they say. Whenever the media is saying that it's going to hell, then you know that's the right time to buy, right? I mean,
exactly.
We know that. I mean, the second the media have got hold of it, it's the opposite. It's the opposite in crypto. The second I see an article saying Bitcoin's going to the moon, it's a great time to buy, I'm going to sell, right?
Exactly, and this is exactly like how it works. Like here, everyone was saying, so we will have a Black Monday, Black Monday, Black Monday, boom, 10% or 15% move to the upside. So yeah, this is exactly, so this is a good, in my opinion, like a good strategy. Like hear the news talking about something, if it's positive, just
yeah,
in my opinion,
trade.
no.
But when it's on Twitter or it's on the blogs, don't trade. But when it reaches CNN or MSNBC or Fox News, that's your cue.
Exactly, yeah. So yeah, we had this, let's say, fake news, or let's say mistake from the White House. So in Tuesday, like we had, let's say, a double top. For me, this is a double top. So we had a double top here. We opened the NY session. We had this push to the upside. My perfect setup took this previous week, close bearish. Here, I remember I missed the trade because I was waiting for this week first to get taken before entering the trade. But here on NQ, we didn't take the wick, but if we check this is the S&P 500, we took the wick, so it was more here on the setup were more valid here on the ES. So yeah, so again, continuation to the downside. We had, like, as I said in the beginning, we had some good moves, like 8% move. So on Wednesday, that's the pattern I said it happened on, and it's happened a lot of times that NQ respects, and I think GC, like gold, also respects, let's say 60-70% in my opinion. This, like when we create a low on the Asian session and we have continuation in London, most of the time, let's say from my data, like 70% of the time, NY open, we have continuation. So even though I have, let's say, a zone here of the supply or here, yes, I could take some scalps from here, but it was more a continuation. And on Wednesday, we had, let's say, the real news of the pause of the tariff, and we had like 10-11% move to the upside. And the thing is, we had this move, it was like at approximately the same level when we had the fake move. So we had the fake news here at 17,270, and we had the correct news at 17,448. So approximately the same levels. They want to push the market higher. So yeah, so
correct. I'm sorry, the correct news. That's just, I found that quite funny.
yeah. And the funny thing, like I was talking with the last session with Sam and my coach Michael also about this. Like there was one reel. It was like, I think, President Trump with the Schwab CEO or the owner of Schwab, and they were talking about how many billions they made from this move to the upside. So it was something interesting to watch.
Yeah.
Yeah. So again, on Thursday, we had the same pattern that we had on Wednesday and on Monday. This is the high of NY session. The Asian session, we respected the high. We went down. London also respect the high of the Asian session. And in NY session, we had continuation for this, let's say, substructure of this push here. So it was interesting week. It was full of volatility. One thing that's I said when we had the open of this week, I saw that we open in a gap of, let's say, like 2% gap. So for me, it's a little bit shocking to see the Monday is ranging like this, because to be honest, I was expecting this week to be volatile also. So it's like, for me, a measure of volatility of the week. It's just the open. So when the open, we have like a gap, interesting gap. So most of the time we see a volatile week. So in terms of the levels, so currently we are sitting on a 4-hour supply. As I said last time, how I draw my supply zone and demand this week here, this candle here, it took this previous week, closed bearish, we had continuation. So for me here, we had something. We touched the zone here once. We had like a move of, let's say 7%, and so everything is possible. We can have here, we had, let's say, double bottom on the 4-hour time frame. So we could have the same here, double bottom, or break it a little bit higher and then go back to this range. So there is few options. If I would be looking for sales today, it would be from here. I had my setup already. It was here, but I didn't trade this. I try to stay away from Mondays. It's just not my day, Mondays and Fridays. So the plan for this week, if I can show the calendar, can you see the calendar?
Yeah.
Okay. So the plan for this week, actually, Monday no trades. Tomorrow scalps. It will be like fully scalps, unless I saw something interesting. I could go for an intraday move, but for Wednesday and Thursday, it could be some interesting intraday moves. Maybe the question why you are, let's say, predicting that, it's just, for me, it's probabilities. When we have, let's say, US retail sales and we have, let's say, US initial jobless claim, like 80%, 70% of the time, the market tend to take a trend, so one direction. So that's why, like, so when we have like news in the pre-New York, so when the NY open, like most of the time we get a clear direction, lower or higher. So that's why I like to go for intraday move when we have a in the pre-New York session, we have some important news like US retail sales and especially US initial jobless claims. Later today we have Trump college football event, so we could see some movement later if he says something. So in term of yeah, but I will keep like gold and Bitcoin for later. Yeah, so that's it for me.
No, I'm just like, what is he gonna say at the football game, right? What is he gonna say? I'm like, what is he gonna say, guys? I'm like,
yeah, he like attention, so I think he could say something. Everything is possible with Trump.
That's very true.
Yeah.
I like that that direction thing about kind of people waiting for these news events to kind of decide what to do, and then the trend will play out. I like that. That's something I think quantifiable people can use. That's quite interesting. I mean, how long have you been using that approach?
Maybe 4 years, 3 years and a half.
That's good. So I need to figure out then what if that happens in crypto. What's the quantifiable factor which determines the trend? It's I don't know, but that's quite interesting. I think that's very helpful for people, actually. Perhaps in another session you can jump in a little bit more about some of the specific types of news events and the combinations which work for you, because I think that's an interesting or even we've got time later today maybe.
Yeah. Yes, especially for weeks, because do you watch daily 4-hour weeks or sometimes maybe hourly weeks when you trade, Aymane?
So sorry.
which kind of a time frame weeks do you watch technically when you want to enter into trade? Do you watch 4-hour and daily weeks for your setups, or sometimes even the 1 hour or half hour?
So if let's say if I am targeting like an intraday move, so I watch the daily just to see the, let's say, the direction. If we have, can I share my screen again?
Yes, of course.
Yes, please.
Just
So the daily, it helped me just to, for example, when we were, let's say, it was Tuesday.
okay.
So for example, Tuesday here, when we were inside this week, when we were inside this week, and I have this big bearish candle, like at the end of this trend, let's say. So I was let's say looking for buys. So I was looking for buys. So the daily helped me just to see the direction. I know, because this is one thing I want also to talk about. Everyone have his own definition. And I think for me, like when you see me saying here that I am bullish, you will say it's crazy. But for me, it's just big bearish candle at the end of this trend. So for me, this is squeeze, like we squeeze the sellers here. So here we squeeze the sellers. So for me, the confirmation was we took this previous week, close bullish. One thing, it was a little bit, let's say, not in my favor. We had big week also to the upside. And sometimes, like, let's say, how I see things, we could have sell limits also here. It's not just buy limits here, but if the momentum was strong, and we saw it a lot of time, so we break lower. So the daily, it helped me to see the direction. 1 hour also, and the 15 minutes. So for me, when I see, let's say, the Friday was choppy, but let's see here, let's say Wednesday. So Wednesday here, let's say this is pre-market, it's 2. So I see that we are pushing, like we took this previous week. Here they try to push, but the buyers step in here, and the footprint confirm for me that. So we saw big push, and when we switch to, let's say, to 15 minutes, 30 minutes, we see also some push. Yes, for example, you can see that we are pushing here. Here we are pushing. We took this previous week, close bullish. Again, we took this previous week, close bullish. So you can see pre-market that the buyers are pushing. And in footprint, you can see, for example, here, I remember I saw that the sellers were absorbed. So I saw that there is big clusters here for sellers clusters. So for me, if there is real sellers, they have to push the market lower. And the context also, because it's combination of a lot of things. And the context also here to take buys, it's also similar candle. This candle here took this previous week, close bullish. So for me, this zone here, I draw it already. So this zone here was to take buys. So if I'm looking like for intraday move, daily 1 hour, 15 minutes confirmation, 15 minutes, and then 5 minutes confirmation. And if I am looking for scalps, I use actually the same concept, but I use the 30-second.
Oh, yeah, it's really low.
Yeah, scalp is 30-second. Yeah.
I don't think I've ever looked at the 30-second. I feel like it's Ant-Man going into the quantum realm. I just don't want to touch it. Do you know what I mean? What will happen if I switch from a minute to 30-second? I feel like I will lose my capital. I don't know why. It's not rational.
Yeah.
but it's true. And one thing is, like, if you are a scalper, you have to sit in front of in my experience, in my opinion also, like, you have to sit in front of the screen 1 hour, 30 minutes max. Like, if you pass this 1 hour or 2 hours, you will start making bad decisions. So 1 hour or 1 hour, 30 minutes is the max I can stay in front of the laptop. Otherwise, I get error.
Yeah, I suppose it's like looking at a painting like this close, and then just trying to figure out what's going on by just looking this close. If you stay too long, you need to step back. I get it. But I'm going to try it later. I'm gonna try it later. I'll wait till my girlfriend's back and she can hold my hand, and then I'll switch to the 30 seconds, see what happens.
Yeah, and 30 second. Like Igor, just to answer your question, like 30 second. It's not always I go to 30 second. It depends on the ATR. So for me, when the ATR is above 20 points, like if you put the 1 minute chart, if I put the 1 minute chart and I see the ATR is above 20, so I switch to 30 second. So if it's below, let's say in the summertime, most of the time is below 10 points. So for me, I'm looking of 1 minute, or even I don't look for the 1 minute, it's 3 minutes. So this is
yes, measure volatility. Yes.
Yeah. Because like for scalping, you have to have a good stop loss. So for me, like from back testing, like the combination with like especially the 3 minutes and 30 second, I call it the 33 strategy. It's 3-3. Like it's give really good combination when between the 3 minutes and 30 second. It give a good combination. We can talk about it during the live later. Yeah.
Right. Well, all right. Well, I'll tell you what. Igor, you've got stuff you want to dive into, right? But why don't I just show you this crypto token, which has had a bad weekend?
Yes, I wait for that.
And then we can pass back to you guys, and then we'll do a full Bitcoin update a bit later. Does that work for you guys?
Of course.
Yeah.
You're like a salesman. Yeah, you just push that story about some special crypto all these last 15 minutes. So you're very good. You're very good.
Okay.
Yeah.
All right, look. All right, can you see this?
Yes, it's beautiful.
Okay.
Wow.
Wow, it's beautiful.
Right. So this is Mantra. Now, this was a top altcoin pick, I think, last week. And the premise of the trade was, you can see we both had long and short setups. And we obviously had the idea was if we lose this level, which we already had, then it would be a short. Or if we get a breakout, which we did, it would be a long. Now, this long setup worked out quite well. It didn't quite hit the target we were looking at, but solid trade. And then obviously we suggested just to leave Mantra because we don't want to chase a second trade. But we did lose this level. And as you can see, I'm trying to keep a straight face. And we had a candle body close here below this trend line. And as we all know, when you see a candle body close below a strong resistance line, you get a lot of sellers coming in. However, I haven't quite seen this many sellers come in. So this has been about an 80-90% retrace. This has ultimately gone from a $6 billion market cap to essentially 700 million overnight. And I suppose this is obviously switched to a long trade now, but the issue is where do we enter? So this is the bottom. I'm trying to just be a bit silly here, but this is obviously, I think there's a bottom here. So where is it going to stop? How do you trade something like this? Well, the answer is you don't, right? But if you want to, then you need to wait for the ultimate bottom to come in. I mean, this is the crazy sort of stuff we have in crypto right now. I've looked into this project. There's been quite a few warning signs in terms of, not the sort of thing you might want to invest in long term. Still haven't had a definitive answer from the project. What went wrong here? They're claiming that there was some liquidations, and obviously, there's accusations of insider trading and all kinds of stuff. But if anything, if this sort of trade highlights that when you're trading low caps tokens or medium cap tokens, you just need to make sure that you have a stop loss, right? Because if you didn't have a stop loss here, you would be in trouble. I mean, guys, what are your thoughts on this craziness from Mantra?
It's insane. It's really insane.
Yeah, I mean, but look, so it's a 90% drawdown, but if you were to enter at support, it's almost an 1,000% ride back up to where we were. So,
yes.
If the project's got issues, which it clearly does, right,
Yes.
Are you going to enter a long trade here? I mean, Igor, are you going to enter a long trade here?
No, without fundamentals or something. No.
I mean,
dangerous.
Aymane, what about you?
It's quite tricky for me. I will say yes, but I don't know nothing about mantra, because it could have, like we saw, I think, is it Luna or some other crypto, like low market cap, that they had a problem in their projects and they just melt down and starting consolidation. So for me, I think we will not see a V shape, maybe. Yeah, something like this, like you draw. So V shape reversal, I think it's far from it happen. At least like weekly candle to close. See how it will close, and then for me, it's, if it's good project, like it's good way to buy. Because to be honest, like if we delete this move to the downside, if we did it, how many people were buying this, let's say?
Yeah,
I think, yeah, if you believe in the project and it's a good project, I think it's a good. For me, this sell-off, just why it's sold off, just the why, and then how much it cost now? 0.58, and it was how much? Like
it was $6.
Yeah.
I mean, look, this is right. So in crypto, the reason why I bring this up is because this happens in crypto, right? Now, I don't believe in the project, but that doesn't stop people trading it, right? So especially with these low cap tokens, they'll see some pretty significant gains, and then they'll all jump into it without much thought. Retail loves to do that. Now, if I was looking to invest in this for a long term, obviously I'd be looking, when it was down here. I'll do some research into the project, and the project does have some red flags. And I think the fact that the project's is capable of having such a move highlights, buyers just. There'll be a few people coming in to obviously capitalize on this, because if we do get a V-shaped bounce back up to here, that's serious gains, right? And it's difficult to turn you back on that. But there's clearly been a problem, and until we've got definitive answers from this project as to what went wrong, I don't think many buyers are going to be showing up until we've at least the dust has settled. So I wouldn't jump in for a trade right now. But the point is, in crypto, you get this a lot, and you can make a lot of money from these things, right? You have to just have a strategy, to essentially buy V-shaped bounces, right? And obviously, this isn't what I would suggest isn't a good candidate for a V-shaped bounce, because this is such an extreme drop. This is like project breaking level drop, right? If it come down to this area, then sure, maybe, but we've lost all fundamentals and confidence in the project. But you can have this in the back burner, and if Bitcoin starts taking off and the project comes out with some explanation which you can get behind, then you could look for a reversal pattern, and then you could benefit from these low prices. But yeah, if you had taken my advice and done a short trade here, you're welcome. So yeah, but Igor, what do you got? You wanted to do a bit of a deep dive, yeah?
Okay, yeah. So just share a few things related to the things that I watch, just to share with you. I will just show my majors. I hope that you see right now. Yes. Yeah. So the first one is a British pound dollar. As you know, I already have a trade here. As you can see, this level now, you can see much better here. It's a very good level after 2 hours of the correction. I enter into the trade, and I will see right now, as you can see, maybe this will be some kind of the V shape or something. Maybe will again be down, but because of the overall bullish market, I still believe that we can go above 1.32. But of course, I will be break even if I fail on this trade too. The question here related to the British pound dollar is, I want to show you this first. So if you watch and see my trend line on a relative strength index indicator, you can see from the April 4 a bullish trend on 30-minute chart. And this is something really, I need to say something that I didn't see quite often, because problem is when you watch a 30-minute chart, you should every single day to have up down, you know. So 6 hours to 12 hours, you will have one leg, another leg, etc. And we have one bullish leg from the April 4. And this is the very, very strong trend line. In the moment when I took the trade today, I realized, okay, maybe we will just we will break this level here, but that didn't happen. But still, we can see that. So if I see that this level is broken, that will be below 1.313. If I see this level is broken, I will be out of trades, and I will wait to see the new trend line, and I will wait to see how market reacts, etc. So this can be a little bit bigger pullback. When I say big, I think maybe 100 pips or something, because the pullback that we had, if we watch 4-hour chart that we had last week, it was insane. You know, you make 200 pips, and then you make from 1.32 to 1.27 or 500 pips. It was really, really insane. And I really don't like, even then, it's very hard for traders to enter into trade. We have a strong volatility. You lose the bias. You don't know where to put the stop loss. Even you have experience, still, it's very hard to put the stop loss. For example, if someone watched this session and he was live at Friday, I made one live trade at Friday. And what I did, I made a buy order. It was the end of the Friday. I will just find out. It was I think someone here. I made a buy order. And what's happened, the price went almost 60, 70 pips down. For 10 pips, I lose the trade. And after that, you can see what's happened. We went 150 pips up. So it was really, really hard, because even you are intraday trader, you need to put a two times bigger stop loss, and reduce your risk 2 times at least, because everything's changed. So the whole January, February, December, we have a maximum 100 pips daily average range. Now we have every single day 200 pips, and doubled. So it's really strange for me. When we talk about euro dollar, I'm watching euro dollar today. We had very healthy pullback. So the Friday last week, we touched the ultimate high. It was the high. I will just show it's a high from the multi-month high, I think, from the 2021. It was really, really, really big high. And right now, where we watch the market, we can see that price, as British pound dollar, a few hours ago made a pullback here in the pivot point area, which is good. There was a reaction. Right now, we have 1 hour big bullish candle. And I want to see what will happen. I want to see, for example, the price just breaks this trend line here. And that will just show that the bullish trend isn't over, and we are going to see new highs. So it will be nice to see that. However, I assume that a lot of traders can just watch and think about bearish divergence. But like I said, for the British pound dollar, the same thing is for euro dollar. Look this. When I draw the trend line, that trend line is from 20 March. You can see it's still bullish. It's very stochastic here when you watch these movements of euro dollar relative strength index, but it's still bullish from the March 20 till now. We're some bullish move, and it's I cannot see of course you can draw the trend line like this and see it's bearish, but it's triangle. It's not clear. Very easily we can break this and start to go up. So I'm not ready to short euro dollar. I don't like it. So I see the bullish trend yet, and I will just monitor euro dollar. Of course, Aussie dollar, something that I wished it's happened. we broke this relative strength index trend line on daily chart. We broke it, and it would be nice to see some pullback here, some simple pullback, and maybe for some swing trade to go. Because if we watch the monthly chart, believe it or not, the monthly chart, we can see that the last 4 months, actually, we were bullish. Even that we had these lows and everything, we were bullish last 4 months. And this shape is something that we didn't have from the 2020. So here we had a 1, 2, 3, 4, 5 bullish months. Now we have a very, of course, these bullish legs are not so huge, but if this month, in next 2 weeks, we finished with this bullish candle, this is really engulfing candle, maybe we can see really huge push up to 0.7. So really we can make a 700 pips like I wanted to see a few weeks ago. So this trade isn't finished. So
no, I can see that. I can see that move for sure.
Yes. So it's not finished. This push here in last 4 days is really remarkable. I need to say really remarkable. We broke this. Everything is fine. But what I want to see, like Nandan has its heat maps. So I want to see that in all markets, US dollar is weak, and that Aussie, Kiwi, Euro, British Pound, or everyone can beat the US dollar and going up. So this can be legitimate trade. But in any other case, if I see that the US dollar recover, I will be aside, because really we had 4 bullish days, and we need to monitor not to rush into the trades. The same story for New Zealand dollar, the same pattern, everything is the same. Even I think that we had a maybe stronger move than for Aussie dollar when I watch this, and the same monthly for 4 months in bullish trend too. So this can be interesting as a long-term trade. And for US dollar, Japanese yen, we're still in the channel. Nothing happened, nothing changed. I don't like to enter into buy order here because I need additional trigger. But if I see some trigger or some maybe bullish move or something, I will monitor, and maybe I can enter into the buy order. So it looks very nice if we can be in this channel. But like I said, this is just a technical tool. It's not there's no fundamentals here right now. So I'm out of this trade too. And one very important thing related to the COT report, what's happened in last few days, is that I see that the very big, large speculators started to go out from the US dollar Swiss short trade. So we had the maximum. It was the moment 10 days ago, 7 to 8 days ago, we had this maximum. And now we are a little bit starting to close their trades, which can be very good. If we by accident see the stronger US dollar, this will be the top trade, because we are in ultimate support, and this can be very good trade. So now I'm really interested for some swing trade here. Of course, I want to see some proof for that. As you can see, look, this candle, the last candle here, this last candle. In one moment today, this was almost engulfing a bullish candle, but failed and started to go down. It was the false breakout in one moment. Of course, if this day end, it would be again bearish move. So this is why when we want to play long positional trades, we need to be very cautious. We need to wait. Look, this is the really strong bearish move. There's no end of this trend yet, but the good thing, we can see that some big dogs, large speculators, starting little bit by little bit to close their short trades. This week was the proof, and now we are near to new setups in the future. So this is something that I watch. I have one trade that I took last week. I will just show that trade yet. This is trade. Right now I'm a break even. I entered it is the US 30 Dow index. What happened, as you can see, again, I was in that moment in front of screen. I took a trade, just buy trade, because I saw on the chart that we had, let me just show that chart. We started to go with a strong bullish candle. And the next candle I catch on the pullback. And it was really excellent. Sometimes I make that kind of the trades, like today, for example, when I have yesterday strong bullish trend. Today, huge pullback. We stay on 50 Fibonacci retracement or 61% Fibonacci retracement, and then I enter into trade with a very small position just to see it will hold. If hold, I just keep that trade. And the good thing here is for this index is that that we are really in solid shape. Of course, here I do not draw a lot of trend lines, because for indices, these trend lines are not so beneficial for me, like for Forex major pairs. This is why I trade Forex at most, because for indices, we can have a lot of false bearish and bullish divergence. And it's sometimes, you have a 5, 6, 7 bearish divergence, false breakouts, and price just keep going up and up, because the indices are made actually because the most of traders and investors invest in stocks and indices, and there is a lot of bullish days during the year. And this is why my strategy is not so beneficial in that way. However, it's good when you have a good pullback and you enter into buy trade and you trade indices. So this is my philosophy. So very often I like to enter into the trade in that way. Even if you're an investor, if you watch this and you watch a weekly chart for indices like this, you will realize that from the level 45,000, we went to 36,000. So that means almost 20 and such a percent down. And we know by the statistics, in every quarter of 25 years, for example, you can see 6 times that it will drop more than 20% in the indices market. And it's a really rare. And if that happens, investors like to enter in that trade and then keep that trade decades, for example. So I don't know if it's smart to buy here and just take for decades, but this is something that if you watch on the monthly chart, etc., this is very interesting. However, because of these tariffs and the problems in the U.S. economy that can start from that, this can be a huge drop. This is not the end. So I don't know what will happen there, but I just want to tell that this is unique, because these tariff wars we didn't have in the past. We don't know how to expect, what can expect here. So we will need to be, of course, just open-minded here. But I just take a trade. We will see what will happen. I'm break even right now. I don't want to think about that. But if in some way we start to go up, I will just keep my trade. I will just want to see, can it be a little bit investor or not? So it's nothing special. And the last thing that I want to share with you is a British pound Japanese yen pair. So something very cool happened here on a weekly chart. We can see a bullish candle here, and now we are upside on the daily level. And if we watch the chart right now and all this area in last few days, of course this is nothing yet, but it looks like interesting. It looked like interesting. Of course, everyone will tell, okay, this is the bearish trend. we have a bearish move here and etc. But if I see that the British pound as a currency start to be stronger and stronger in next days, this trade can be very interesting and we can go up, because the yen is not so strong, let me say like that. Currently, US dollar, Japanese yen is down just because of US dollar, but the yen, there is a probability that the yen is stronger fundamentally in some point, and who knows? Maybe we can go up again. But I just monitor this trade. It looks really that we are in some kind of the bottom and that we create something. But I need to analyze the volumes. I need to analyze a lot of things, and maybe this can be some opportunity for some longer trades. So sorry guys if I talk too much.
No,
To share some opinion about the market and everything, and I think that that we need to I will stop my screen right now, and that we can hear some news about Bitcoin and the cryptos finally. Sorry, Paul.
Oh, you want to do Bitcoin? Aymane, you got anything else?
Yeah.
Yes.
Actually, if I will show just one small video about just the 33
I've already recorded a Bitcoin update video today, so I'm primed. I got it down to 5 minutes, so it's going to be great.
Okay.
Let me see the video.
It's actually here.
Excellent. Aymane, you're here.
Can you see?
Yes.
Yeah.
See.
Oh no, I can't. It's gone.
It's gone. But
Yeah.
Who's teasing me and why?
Just I want to.
Here it is.
Yeah,
Got it.
because like just to give context, because this strategy without context means nothing. So context always is important. So I think this video I took it just for the opportunities we had, I think on the 9th and some opportunities before. So it was here the 9th, as we were sitting like in a demand, as you can see here. So let me zoom in. Yeah. So we are pushing here pre-market, showing strong buyers. Footprint also shows strong buyers. So we took this previous week, close bullish. We had continuation. Let me. Yeah. So here we had the NY open. So the bias was bullish. This is normally how I plan the day. So in the beginning, like I see which zones are interesting for me to take the A+ setups, and I like to go also with the momentum to take couple scalps. So for me here the bias was bullish, but I had this supply here based on the same type of candles. This 15 minutes supply took this previous week, close bearish. So my A+ setup, I will take it from here, and currently the momentum is bullish. So if I got my, let's say, scalping strategy was valid, I will be more taking buys than sells. And here it was a quick video explaining a little bit the strategy. So on the right side you can see the 5-minute time frame, and on the left side is the 30-second time frame. So what I am waiting for is simply like, after I identify the direction, I am waiting for this sort of candles. So a candle which took the previous week and closed bullish. So you can see here on the, now you can see it more clearly. So on the 5 minutes, this is the type of candle I want, but I don't take the buy after the close. I wait for the next candle to open, and I am looking for the same type of candles in the 30-second, same type of candle. So here in the 30-second, I have the same type of candle, like here. It took this previous week, closed bullish, 1-to-1 or target the high. So I checked the ATR. ATR here is 50 points. It was crazy volatility last week. So 50 points. So I put most of the time 50 or less points, and target 50 points or 60, 70 points. So 1-to-1, 1-to-1.2. But of course, there is a lot of variable to the strategy. It's not just this, and especially the context of it, because you can take those type of candles is everywhere. You can find it, but you have to have the context for it.
Yeah.
So this is sort of, let's say, an example. We had another example here. We took this previous week, closed bullish, and we had always we wait for the next candle, which is here, this one. So this one, it took the previous week, closed bullish, and we had our targets there. Yeah, here I show just that we took this previous week, closed bullish. So it's so simple. If someone watching and he like it, first backtest it, and yeah. And about the context, because I mentioned the context. Like for me to identify the direction of the market, there is a lot of things. I don't use much the structure. I use much footprints, the size of the candles. For example, when I see like big candle, we had like big bearish candle inside the demand. For me, of course, I don't jump to buys, but for me, it's sort of indication I have to wait to see more that they could be like a reversal. So the direction, as I said, I identify it with the wick. So every time when I see like, let's say from the 18th session that we are pushing, and we create the lower 18th session, and we had London session continuation. So I like to see more that in NY session a continuation. Also the wicks. So for me, for example, let's take a couple of examples. Let's start with Monday. Even Monday it's a little choppy, but we can. So here Monday we had, let's go back to the 1 hour. So for example, here the 1 hour, let's do it live. So NY open around here. So I remember this price action, we had demand zone. So we were sitting, let's say this is how I see the context. So we are sitting in a daily and weekly demand zone. We have the demand zone right here. Again, the same concept is we took this previous week, closed bullish, and we had continuation, because there is difference between took this previous week, closed bullish, and the price is still here. And there is the second type is took the previous week, closed bullish, and we had continuation. For me, like this is more, let's say, this is more A plus setup. Let's say waiting for this zone here. And of course, I always check the fresh orders. What I mean with the fresh orders is on the footprint. I want to see like a sort of absorption. What I mean with absorption is just if I want to take buys, I want to see big clusters on the delta charts and no movement to the downside. So we call it the absorption. And then I see like reversal pattern and take the buys. So let's say here, for example, here it was a little bit aggressive, because I like to see candles like it took this previous week, closed bullish, and it's somewhere here, because now it's maybe it's I have to wait a little bit to retrace. So here already the market orders that enter here, the orders that they were filled here, they were strong, they were market orders. So we had big push to the upside. So I will be waiting for a buy. So when I see this sort of candles and on the New York session, I am more tend to buys. I will look more for buys than sales. Where I will be looking for sales, for example, here in this day, I will be looking for sales here. Yes. I will be looking for sales here. It's same zone, and I check bigger time frame, and there is here also, and we have here also. So here I will be looking for sales. But this is the tricky part, because most of traders, they put their trading plan, okay, we will enter sell from here, or we will enter sell from here. But they don't see that there is the momentum. Momentum always matter. So if we had NY open and the momentum is, we had, let's say, from the the Asian low, we respect Asian low, we had momentum. Your zone doesn't matter, because we have big momentum to the upside. Maybe we have before some news. So I have to see a couple of confirmation in when the price arrives to my zone. I want to see absorption. I want to see some big bullish candle at the top of this small trend. So just to trap the buyers, just to invite the buyers, maybe we are going higher, and then a reversal pattern. So this is how I identify a little bit the direction. And let's show a little bit the footprint, because it was one trade that I really like. It was happening here. So the idea of it is simple. So we are sitting in a supply zone right here, took previous week, closed bearish. For me, like, it will be like really interesting if we came to take this week and then reverse. But as it's for now, like, we create a sort of double top. We will see if it hold. And we are sitting in a supply zone. So for me, if it was not Monday, this is how I will be trading. So, okay, daily, what we have daily. So we have, like, we took this previous week, close bullish, but we have big candle. So in this candle, it could be start of bullish momentum, or it could be just a trap, because like what we got here for the sellers, we can get it here for the buyers. We had big bearish candle on Friday here. Monday took the previous week, close bullish. We could have the same thing here, big bullish candle, close on Wednesday. We are respecting this candle, and we could see again continuation to the downside. So everything is possible here. We are sitting on supply. Again, switch to the 4 hour. 4 hour we are in supply. Okay, so I ask myself where I can buy, where will be my let's say A plus setup. So A plus setup will be for sure here on this zone right here, or right here. If I go lower to the 1 minute, to the 1 hour, sorry, like we have this zone here. So this was the NY open somewhere here. So I had this zone right here. I will draw this zone, but I will be more tend to sell. Why? There is few things. We are in a supply zone. We had this big bullish candle, and after we had like reversal. So there is few things. We open up with a gap. Okay, we could come fill the gap, and then the third thing is, okay, we have some, like, we are taking this previous week, close bearish, again here, took this previous week, close bearish. So I want to see if this high will be respected. So when I will go down to the 15 minutes, what I will be waiting is sort of, let's say, this type of candles, like here, take this previous week, close bullish, and see the 5 minutes, and maybe take a scalp buy, because we are in a supply zone. This is how I will be thinking. Okay, we are in a demand. So if I buy, will be my target. Normally, if we are thinking logically, this first target. So there is no enough range to take buy. So this is how I will be thinking. Okay, so even though the buys will plays out, I don't have enough range to take it, because what I will enter here, put break-even rate after it doesn't make sense. So I will be more waiting for sales. And what happened is, we had our confirmation candle. We are in a supply zone. If you remember that the 1 hour, we took this previous week close bearish, took this previous week close bearish. So for me, this is a zone here. So when I go to the 15 minutes, I have my confirmation candle. This is without showing the delta. I will show the delta after. So here on the 3 minutes, we had our confirmation. So here we had the 15 minutes candle closure, and we got our confirmation here. As you can see, here 3 minutes, we took this previous wick, closed bearish, and we had the continuation. So to show a little bit the footprint, how it looked like, I don't know if you can see the delta chart.
Momentarily. Yeah, got it now. Yeah.
Okay. So this was like the 15 minutes delta chart. So you can see at 3:15. So we had like some big clusters, some buy clusters. So you can here on green, this is the body of the candle, and here without green, it's the wick. The same thing here. This is the wick, and here it starts the body. So you can see that we have like a big clusters on the top of the candle, and then we didn't have continuation. So the buyers were absorbed. Plus, you can see that this is like, if we check just this here, you can see that we have, this is the volume. So this is 8,580. So this is the biggest volume. This is before the market opened. This candle here, the market opened. So at 3:15, we had the biggest volume in all this trend, upper move, this bullish move. So for sure, I don't jump to conclusion right away. I just say, okay, there is something happening there. I want to see some sellers. So here I will start to say I want to see some sellers. And then what will happen? We a New York open session, and we saw like 37,000 in volume, which is normal when at the open there is volume, and the delta was really negative, 1,508. So the delta, we have a lot of sellers. And then I will check the biggest clusters. We have this minus 169, minus 151, and I have this minus 181. And then I start saying, okay, maybe there is just the sellers here. Maybe they will get absorbed. But because I have context from the bigger time frame, and I will be looking just for my confirmation, and I got my confirmation here. Normally, if I'm basing just on the footprint, I will enter here. Why? Just the delta is negative. We absorbed the buyers again. So there is big clusters, but no continuation. There is wicks. And then here we saw big sellers in the bottom of the candle, which is a little bit worried, because what I will say here is I want to see instant continuation. If there is a move to the upside, so those here are not sellers. There is just trapped sellers. And then as I explained before, the entry will be here. But I didn't expect this type of move on Mondays, but it was good setup to take.
That's fantastic. Thank you for that deep dive. I think a lot of people paying attention have got a lot of tips from that.
Yes.
Yeah, thank you.
Nice.
Thank you. Any thoughts?
Nice. I like just. Sorry, I just like that you use this volume footprints, and when I see that, I see a logic very often. I started to use volumes profiles and the relative volume lately, because I realize sometimes we can just avoid false breakouts. So very good strategy.
Yeah. Thank you.
It's like with anything. When you're learning to trade, you know, you're all about the candles, you're all about the price action, you're all about the structure. And when I started leveling up as a trader, and every market is different, of course, every market has got their, you know, the doors you can knock on to get some insights into the money flow, into what the movements are. And for crypto, of course, you know, we talk about it all the time. We talk about Bitcoin dominance, we talk about basic things like that. But any insight you can get, which can act as a functional trigger for a trade, you know, is important. And it doesn't have to be the traditional ones, like it's oversold on the RSI, or we've had a breakout of the RSI. There are many different tools you can use. There's one guy who there's one guy who came to me to learn how to trade. Now, I didn't take him as a student, because he didn't know anything about normal price charts. He didn't know anything about TA, but he knew how to figure out whale movements, right? Like nobody I've ever seen, right? He had an insight right into the core of assets, right? And it worked. He just didn't have the other knowledge to essentially take action. So Aymane, like you, he has the knowledge to look into, you know, what's going under the hood, but he didn't have the knowledge to then understand how to impart it with a successful trade. And I think everybody else needs to step outside themselves, find that edge, whatever it is, and stick with it. And because there's, you know, if you can find an edge which not many people are using, or a combination of approach, or an order of strategy which is different to everybody else, that can allow you to be successful. Because ultimately the same game of, well, here's a triangle, let's buy the breakout, you know, they're just probabilities, and we're trying to increase our success rate and our probabilities in terms of our win rate, as opposed to just, oh, well, it was 50-50, it went that way, and okay, we'll trade another one. So very insightful, really inspired, actually. Hopefully we've got some more sessions with you later in the week.
Yeah, for sure. Thank you. And yeah, so it's like as you said, like it's all about, and especially about letting your edge play out. So with any strategy, triangle or footprints, you have to let your strategy plays out. Of course, when you have a, let's say, better strategy than the other, it helps you mentally. If you have, let's say, bad psychology, because for me, I know, like when I say this, a lot of coach traders, they don't agree much, but for me, like, psychology important. But if you have a good strategy, you will feel less the impact of psychology. Of course, you will feel the impact of psychology, but when you have a good edge, a good strategy, for me it's number one. I'm just saying, but it comes from the fact that if you have a 70-80% win rate, let's say 70-80% win rate, I think the only thing you should have is just discipline. Just be disciplined to apply this strategy. Fear, greed, okay, it happened. It will decrease your win rates a little bit because your psychology is bad. But if you have a good strategy, yeah, it will happen, but still, you will be still profitable. But when you have a bad strategy and you have, let's say, a normal psychology or bad psychology, it's disaster.
Yeah, I mean,
what's your thoughts?
Sorry, I mean, it's like if somebody, so I'm not a builder. I couldn't build a house, right? But I can hammer a nail. I can measure something, right? If somebody puts me in front of some cement and bricks and says, build me a wall, I'm going to panic. But then if they hand me a piece of paper with instructions, I'm not going to be panicking as much. And the importance of new traders essentially getting that piece of paper in front of them, regardless of their experience. So I've got a lot of obviously it's all about W's at the moment, W patterns, inverse head and shoulders, all that kind of stuff, triple bottoms. So I've been saying to one of my students, who's very close to having a very basic strategy for reversal patterns nailed down. So it's pretty good with a 70 to 80% sort of success rate. And I just said to her, right, this is your first strategy which you're going to have, which you know works, which has been tested and proven for your tool belt. And this is going to help you with your psychology, because now you know you can trade it, you can do it, and you know not to do it when this happens and to do it when this happens. And the whole game, I suppose, is for traders to have a selection of those strategies for different contexts, like you said, and then to just roll them out. And if you're learning, listening to people like, Aymane and Igor and so forth, to steal these strategies and see how they can be adapted for your own emotional center is key to trading. Because ultimately, we say, we're not saying have a plan because we're obsessive compulsive people and we want everyone to have a plan no matter what. We want everyone to have a plan because it's the only way to calm down your mind to trade successfully with consistency. And I think that's a fantastic point.
Yeah, exactly. Just to add on quickly, like I think a lot of new traders think, I think I said it before, they think that they are free to do whatever they want. So when you put a plan, so you limit yourself to respect, because trust me, if you come to the market with the mindset, okay, I'm gonna quit my job and I am free now to do whatever I want, just with this belief of freedom, even though there is good side of it, but in trading it's bad. It's a bad barrier a trader, especially new trader, can have, is just freedom. For me, there is no freedom in the market. You have to, because I suffer a lot in just to find out that I have this issue of freedom. But when I discover it, like everything start to like come together, and it's just, I want to add this, it's really important.
Yeah, we definitely need to do a podcast on the psychology of trading. I'll propose it for all of us. Shall we have a look at what's? I said I could do it in 5 minutes, but let's see if I can. Shall we have a look at the crypto space?
Yes, please.
A much more disorderly environment, as we've already established, I think, today. So before I jump in, let's just want to talk about ADA for a second, as the crypto OG. So we're talking about this setup was last week for a trade I was thinking of entering, which was essentially, we had this breakout and the price action was recovering, and the trade was to watch for a retest entry. And if you had entered at the support zone, this would have been a successful trade over the weekend of about 7% spot. So congratulations if you traded that. Now, the next possible place for ADA, because it seems to be, keep holding its own in this area for now, the next possible trade would be if we break above this key resistance, and then you simply want to come in with the bearish retest or whatever your strategy is. I wouldn't recommend just buying the breakout on a candle body close at the moment. We could do with a bit more confluence. I mean, there is a pattern of sorts here. You could look to trade off, and the problem is, of course, you're running into resistance. So really, we want to see something like this up here, another breakout up here, maybe into this upper range, and then we could come in with a bit more confidence with the retest. But keep an eye on ADA, potential trading setups coming over the next few days, because it's keeping itself above this horrible negative zone here. So just keep an eye on ADA. But anyway, ignoring this for now, let's go back to Bitcoin. So this is Bitcoin 4 hour, and last week in our sessions we've been talking about Bitcoin's negotiation with this area, and since then I have drawn 2 diagonal lines to reflect the kind of diagonal range which we've got here, as you can see, which can be quite confusing to buyers and sellers in these areas because they're not quite sure whether to buy or whether to short. So we have broken above this, out of this range, which is great. This is fine, but we have, of course, significant resistance overhead with the 618. So let's just see how we're responding on the daily. So this is the daily chart, just to get perspective on the big picture. And we've obviously we have definitely broken out of this pattern. Low volume break, let volume be your guide. It's just eked itself out, and there hasn't been much volume confirmation. So we have to ask ourselves, where are we going next? Are there going to be a ton of buyers coming in here? Maybe, but I'm not as 100% convinced as other people might be. So this is the hourly chart. Just to zoom in some perspective, we have support here, of course, and we are firmly above into this zone now. So this is an area of interest for the price action. A move back down here to this support zone would make perfect sense. Allow for the price action to cool off a little bit following its moves over the last couple of weeks. Would that push us back into the pattern? Maybe just on the edge. So it still could maintain a bullish context. But here is another one day just to kind of highlight what we kind of need. So just to orientate yourself, these are previous all-time highs put in January following the run-up from the November election. And now we are trying to find support in this, well, the strongest level of support for Bitcoin, which is around the 74 to 69K range, but we're not in it just yet. We're in this support zone just above it. And obviously, we don't really want to come down to this range if we don't have to. But you can see the optimal entry would be on a higher low here, which would form a triple bottom or a inverse head and shoulders. And then you'd have a neckline to trade off. But of course, with these fib levels overhead, that would probably be the line you trade off. But we do need to see that higher low. And if we do, we've had a nice completed reversal pattern in a nice, over a couple of weeks, 2 or 3 weeks. And then you could expect Bitcoin then to find its feet and ascend higher. But we haven't had that yet. And obviously, if we do get a lower low, we're going to move down into this bottom range, which we do not want to do. So this is what you need to be looking out for if you are one of those people looking to get into Bitcoin at this point, and it isn't a bad place as long as we can maintain it. And here is another perspective on this whole higher low thing, which we're looking for. You can see the previous tussles with the 200 MA here back in September 23, when the bull run kind of kicked off. And then, of course, we have the same again from the summer when Bitcoin put in all new highs in March 2024. And we had that low, the lower low, and then the higher low, and then the price takes off. Obviously, these basic kind of W patterns are playing out. And we have another situation here again, tussling with the 1-day 200 MA, and we're just waiting for this final part of the reversal pattern. And then you may start seeing, providing the context in the world is a little bit cooler, people start entering for a reversal. But obviously we want things to be calm this week. We don't want any negative news. We want this lower high to form, and then Bitcoin can maybe have a crack. But as you can see, with Ethereum, the general sentiment in the market, that's not the right chart, the general sentiment in the market is still this. And this is what we're contending. And Ethereum is, of course, wanting to get back into this pattern, but it has no interest in doing so until Bitcoin gives it a signal. So this is representative of the rest of the crypto market. Long trading is a bit difficult right now, but that will change if, of course, Bitcoin can give us this reversal pattern. And just to give you a little bit of hope with historical trends, this is from 2013 to 2017. It's not quite my 1970s gold chart from last week, but it'll do. So we obviously, this is the run up, and as you can see, this is the December 17 high, and we essentially then broke at the previous high a couple of years later, and then we ascended. And basically, this bull cycle, when we broke the all-time high, we put in about, let's have a look at what the gains were. We had 300% gains from the previous high in the last bull cycle, and you can see we are touching this zone again here. Now, just want to kind of highlight a few things that we could. So obviously, the point I'm trying to make is that this is where we are. The levels are all lined up, and this is essentially, this is what we should be looking at. Excuse me, I'm sorry, I've done that slightly wrong. So this is the level we should be. This is the sorry, I've done it backwards. I've completely screwed it up. Forgive me, guys. The clock's ticking. I'm feeling the pressure. So this is November 13, which was the peak of that bull cycle prior to the 2017 one. And then you can see, obviously, we have the bear market. And then when Bitcoin's price surpasses, there we go, surpasses the all-time high of $1,249, then we ascend about 1,500% that cycle. And then the next cycle following that, when the process repeats, this is the 2017 high, then we had essentially about 300% gains. Now, what gains have we had since we broke the all-time high from the last cycle? We've only had 60% gains so far. Now, of course, the law of diminishing returns does, of course, highlight the fact that the bigger Bitcoin gets, you're going to have less returns each bull cycle. This has been the case. This is a historical pattern. The gains which Bitcoin had back in 2010 and 11 are off the charts compared to percentage gains, what we can expect this cycle. So we don't necessarily going to see 1,500% gains this cycle. The last cycle was muted because of economic issues, so 300%, 200, 300% may still be on the cards this time, but a more modest 150% move up to maybe here, which would make Bitcoin's market cap essentially 3.72 trillion, may still be on the cards. But to answer the question, is Bitcoin done? Not based on historical cycles and not based on this chart. Any thoughts on that, guys?
No.
I think I think it's the 78 support level that you draw. Me also, I think like if we broke lower than that support, I think we're gonna go to the next range. For me it's lower, like 38 you put, or 42. Yeah, if we broke the support between the 75 and this green support in green, I think we're gonna melt down. And for me, I compare it with the DXY. I know I think they are not correlated, but for me, I had the same demand in the DXY, and when the DXY broke it, like it melted down. And I think in my first session, starting with Ola Prime, I analyzed the DXY and I said, if we broke this support, we will melt down. And the positive side, let's talk about the positive side of the thing is, like, we had a lot of news that could melt the Bitcoin in the past few weeks, and we didn't see it. So this is for me a positive thing, the only positive thing I have about it, because we saw everything is melting, and still Bitcoin hold the 84,000 price, between 75 and 84.
Yeah, you were definitely one of the first people last week to start talking about 40K. That's right. That was you, right?
Yeah.
And I think, look, so this is the dollar correlation. We've just got to finish, but you can see that the dollar's continuing down, but Bitcoin is holding its own now. So it's going to be interesting to see what happens. But obviously, any asset under tremendous amount of pressure is going to break at some point. But Bitcoin is being resilient. We just need to try and ease up on the pressure so it can go about its merry way, and then hopefully the rest of the markets. But just a bit of a Bitcoin roundup, and hopefully, of course, we don't go to 40K, because I don't want that. I just don't want it.
Yeah, thank you very much it was a great session.
Yes.
Absolutely great to see you, Igor.
Yeah. Great to see Paul and Aymane. I wish you a great day and see you soon.
Thank you, guys.
Thank you.
Bye-bye. Happy trading.
Hey, Howard.
Hey, how you doing, mate? You all right?
Yeah, very well, thanks. How are you?
Yeah, cannot complain. Not a bad day all told. So
Yeah, the typical default answer, right? Like even when it goes really bad, then
Yeah,
somebody says, "How's it going?" It's like,
yeah, pretty good. Yeah, I just lost my
we'll
ass.
never. Yeah, exactly. There's Michael as well.
Hey, what's up, guys?
Hey, Mike.
Hey, good on you, man.
I'm doing awesome. Happy Monday. What's up,
Yeah,
Howard?
happy
What's up,
Monday.
Nate?
Wow.
Yeah.
Yeah. Let's say nothing about Yeah, I had a very long day. I'll be honest. Not trading wise, it was just extremely busy. But I'm going to start, if you don't mind, with I'll start with the pound US dollar.
Go for it.
I don't know if you paid attention to last week's analysis, or actually, I don't know what other people's analysis are. But the bias is definitely long for me for this week. But if you look at where we are right now, we at that resistance level. So there are two things that I'm a little bit concerned about, even though I am still bullish. And that is, the first thing is this steep kind of rally and the extent of it. That's the first thing. And then the second thing is we are approaching this resistance level over here, right? And this is on the 4-hour time frame. But I am still bullish, but I would rather wait for it to break out rather than to kind of predict that it's going to break out from this level. Does that make sense?
Yeah.
So I would like to see a pullback. That would be great because it is due for, I would say, a pullback, because this whole correction has been pretty much taken out completely. And this is a very big move. This is about what, like 500 pips or something? It's pretty huge. Yeah. But if you go over to the longer time frames, see, even on the daily, you have this extension, and on the weekly, well, this is only Monday, but I do think we can hit this level, 1.337. This is not the wicks, but basically the open and close of these candles. So where the body closed on this candle, this bullish candle, and when this bearish candle opens. So that would be a realistic target for me, and then potentially even go higher than that. But my concern, as I said, is the extension, right? That rally and that resistance level. So it's not the same in terms of probabilities. This for it to go long right here is not exactly the same as down here when it broke this resistance level from that range that formed over the course of 2 or 3 weeks or whatever it was. And then, well, first of all, we hit that major support level, and then it bounced off it. And if you break above the resistance level, then you've got clear skies, basically. Not clear skies, but there's a lot of room
to run.
To run. Yeah, but that opportunity is, for now, I think, is, I mean, you got to like just hang on a little bit, just hang back a little bit, and wait for it to either pull back or to break through. If it does break through, then you can take it from there. Maybe a retest or something like that. I feel it's probable that it's going to pull back. I don't know. But for me, I just want to like see what's going to happen here. What do you think about that?
No, that's a fair point. It's a big level for sure. For me, if I'm trading the pound, I think I'd probably anticipate it a little bit if we broke through yesterday's high. Because I'd imagine there'd be people that sold short yesterday, Friday rather, looking for the top, and it ain't happening kind of thing. So I think if we take out the last bar's high there, then I think we could it could give us at least a test of those highs, and maybe it goes, maybe it doesn't.
Yeah. The thing is about these extensions, they never tend to carry on for too long. That you need that kind of like almost like for this trend to take a breather, maybe consolidate or pull back or something. But I don't quite feel comfortable to long right here. I just don't feel it's not the same as a setup like this over here, for example.
Agreed. I think it was a perfect spot nearly to take it. You guys know I trade those the pattern, right? So once we got that double bottom nearly, but that second leg kind of didn't go and retest that low area.
Oh, you mean over here?
Go down.
Double bottom.
Yep, double bottom. Yep. So you see how the second leg of it didn't really go and touch the area like the first leg did.
Yeah.
But once it broke right where you are now, once it broke above that, that was long all day.
Yes. Yeah.
I took this trade today in London. Believe it or not.
Yeah. No, today was a good day to trade it.
Yeah.
But now that we at this level, I just feel
agreed.
Yeah.
Yeah.
I think that the probability. Now. Yeah, exactly. Exactly. I feel exactly the same way. All right. So that's the pound US dollar. It will be interesting to get your takes. What was that? Oh, people tend to bark at me in the sessions. I don't know. I haven't actually had a look at the NASDAQ today.
Yeah, are you back to trading the NAS now? Is the volatility come down a bit?
Well, as I've said, I haven't traded today. I didn't trade it last week. Well, today is Monday. Yeah, I was on the road for like 4 hours today, and I just got back like 5 minutes before the session starts. So it was a bit of a rough one, but yeah, I think just by looking at the daily, we're obviously hitting that resistance there, but just by judging on the price action of Friday and today, it's not really clear, is it? It's not a really nice, clean, clear picture, apart from the fact that we are hitting that resistance.
The move happened on this already. Like, if you can almost imagine that double top there, and then it broke that level, and it retested it, and it closed below.
Yeah,
the move happened already.
Yeah, and now we kind of. Yeah.
Sorry.
Yeah, as you say, we're retesting the broken support now. So this is like the second attempt. So yeah, for me, it's a little bit of no man's land, and I fancy it down, but I want to see it lower first.
Yeah, I agree with that. Very interesting thing I saw on this. Remember this move yet? This was on the 9th of April. So that was like last week. Remember when like $5 trillion was added back to the market? That was on the 9th. That was when the 90-day pause was announced.
Yep. Had that 9.52 surge in 2 hours. Yeah.
Yeah. And the fact that the move started 20 minutes before the announcement. Did you know that?
Yep. That's what they're trying to get some of these traders for inside trading over there. Like somebody bought like 596 call contracts, make like $40 million off this move. Like, dude, seriously.
You can imagine. Yeah. You can imagine what.
Yeah. and even to add more context to it, don't forget that it was fake news that there was going to be a 90-day pause, right? And the market rallied a bit. It was sort of a dead cat bounce. Then they seen it happen, and they was like, "Oh no, that's fake news," and the market sold back off. And then 2 days later, that's when this happened. Like, seriously.
I mean, that is so. But with all the fake news and AI and all that, I wonder how many times we can expect that.
Yeah, especially nowadays, you can deep fake anything, right? Somebody can be deep faking all three of us right now on a whole session.
Pretty dangerous. Pretty dangerous.
Hey, come on. There's only one Jannie. Come on.
Yeah, but I think in general, I'm definitely bearish on the NASDAQ over the long term. I think things can get very interesting and complicated. It's already complicated, but I think not many people are bullish on the US markets at the moment. Okay, and then I'll just quickly go through over Bitcoin. I opened a trade on Friday, which was over here somewhere. Now, ideally, the entry would have been down here, but I waited for the session so I can place the trades in the session because I also wanted to explain how to manage your risk. So I don't know what you guys were thinking of Bitcoin, but for me, the catalyst of this trade was the very strong support level on the monthly time frame. Mm-hmm. And then on the smaller time frames, like the 4 hour, we got this double bottom. It's a confirmed double bottom because it broke the neckline and closed above. And then we had this pullback, and the pullback basically jumped off. Let me just draw these flip levels quickly so you can see exactly what I was looking at. It was between this 50 and the 61.8, where it retraced to. Yeah, so I got in over here somewhere, and then today I actually added a position. Okay, you can see it clearer here. So this is the trend line. This is the broad trend on the 4 hour time frame that's been broken.
Yeah.
So that definitely changed the well, it's really turning more and more bullish, I would say. For me, I'm already bullish. I've been bullish since Friday. But these two yellow horizontal lines, if I just delete them and explain to you why I identified them as support levels or a pullback area, is because if you look at once it hit the 50 Fibonacci level and then retraced back up, it broke that high, and then this is the 4-hour time frame again. And then it had this little pullback, and then it broke out further. But again, this is very similar to what I just pointed out on the pound US dollar. You see, price is very much extended. When it goes into a really steep, like a rally, like with a steep angle, it has to come back at some point. You need that breather. It needs to either consolidate or pull back. So I knew that was, very likely to happen. And then the next job is to identify where it can potentially pull back. So I identified this high of that candle before that little pullback, and this low here before it broke out again to the upside. So this area here, also kind of this diagonal line, is also inside this this support level. Okay, so I was just waiting for it to
bit of a confluence there, yeah.
Yeah. So for me, that was a support level, and then it broke back up above the support level, and that's where I actually placed my second entry. So you can see I'm in 2 trades. This is the one I took on Friday. It looks like 4 positions. I mean, if you haven't watched the session on Friday, basically I just open. It's just to demonstrate how to open or how to manage your risk. So I open the smallest position you possibly can, and that is a 0.01. And then you take, you drag the line to your stop loss. You look at how much that would be in terms of, in dollar terms. What's the loss? $38, whatever it is. And then you decide how much you want to risk. If you want to risk $500, you just take 500, you divide it by the whatever that 0.01 lot size risk would be. And then you know exactly how big you should trade to make sure that you only risk 1% or however big you want to trade. Okay, so I'm in those 2 positions. We'll see if it works. If it doesn't work, well, I already spoke to my parents. They said my room is still available. I can move back anytime. But I think, again, the catalyst is the very strong support level. I just want to just point out something on Bitcoin as well. Don't forget that on the monthly time frame, which is the daddy of all the time frames, you are in an uptrend. This is an uptrend.
Yeah.
Right? So it makes sense to pay attention to this very strong support level, and then look for, once you hit that level, then you go to smaller time frames and you look for patterns like we saw over here, the double bottom formation here, the breakout, the confirmed double bottom, and the pullback to a fib level, making a higher low. Do you see what I mean? So they all it all lines up and it turns around. Now this may go against me, as I've said, but if it does, then I'll just look for a higher low. If this fails, or if this entire structure fails, I've said this on Friday, then I'll be very concerned about that support level in general, because this is a pretty strong structure. Okay, so if this doesn't hold, I'll be like, not so sure what to make of that.
Yeah, I guess the only thing sorry to interrupt. Yeah, I guess the only thing for me is, I mean, from an Elliott sort of head on, is the fact that you've got those overlaps from the low. Normally, what I'd want to see, if this was kind of the real deal for longer term, is the second pullback, not the one that retested the low, the second pullback which based out between the 50 and the 61.8. The next one.
Oh, this one, yeah.
Yeah, that overlapped the top of the first rally high. So from the actual low, it bounced, then it retested. So the first high that it hit, it went below it, if you see what I mean. So yeah, you've got an overlap between the low of the pullback and the high of the first leg up. So that in Elliott terms is kind of a weak structure, a little bit similar to the rally that you saw on the same chart going back to the previous low at the start of the chart, which rallied in 1, 2, 3, 4, 5. Yeah. So you can see the overlaps there between the pullback lows and the highs.
Yeah.
So yes, it was a kind of a mini uptrend, but it was a weak structure. So eventually it was completely retraced. So with my kind of Elliott head on, I'd be a little bit concerned about, maybe this is one of those same weak structures, and then it completely reverses. But you need to see a breakdown, obviously, to actually call that.
Yeah, no, I agree with that. But for me, again, I think the backbone of the setup is the monthly support level.
Yeah,
right. That is just the backbone of it all. So, and that for me is the catalyst, and then everything else is based upon that. So,
what would you need to see on a monthly basis? What would break that trend for you?
Well, this is not well for me. For the trend to break would be this level I've got over here. Well,
I'm sorry,
the trend line is
the uptrend. Sorry, not the mini downtrend, but the uptrend. So the major uptrend on the monthly. What would kind of make you bearish?
Oh, on the monthly, as I said, like if this structure that we've got right now,
yeah, if
it breaks this, because for me this is pretty solid.
Yeah.
Okay, we just got a message here. Something has been disconnected. You guys are still there, right?
Yeah,
I'm here.
I'm still here.
So let me just. I've got 3 different Bitcoin charts. Yeah. Well, yeah. So if this is a very strong structure, I think if this higher low breaks,
yeah,
I'll be very concerned. I'll be like, ooh, it doesn't look good anymore. And that will leave me in. Yeah. So that will definitely leave me in. I don't know land. I'll be like, don't know, because to me this is a very good structure. Yeah, I'll just stand back and listen to what Paul has to say. Paul, you're watching. I know you're watching. I know you're watching with your popcorn and your Diet Coke.
You're talking about his favorite market.
Yeah. So that is my that's my take on Bitcoin. So I'm still bullish until if this doesn't hold, then I'll I'll just reassess everything. And then in the meanwhile, while you guys take over, I'll have a look at the NASDAQ and see if we can potentially get like a scalping opportunity or so for the session. So yeah, over to any one of you.
Yeah,
Michael,
I'm happy to. Yeah,
or
I'm
Howard,
happy.
doesn't matter.
Yeah, I'm happy to jump in. 1 sec. Let's. There we go. Just a quick look at these dollar majors.
Here we go.
So that's an interesting looking chart. Here we go. So euro dollar. This is what the 15-minute chart. So that's the high for the whole swing. The pullback from the high has broken down into 3 waves, which is an ABC labeling Elliott wise. So that tells me that the trend is still on this time frame. It's still up. So we had that kind of labored rally from the low. Again, another 3-wave move down. No clear 5-wave decline. So for me, the trade would be going with the a resumption of strength. But again, I want to see the market break above these highs. I think 113.80, which is not a million miles away. Should we get to 113.80 today, maybe early tomorrow, that for me would be a trigger for a retest of the highs at least, maybe beyond. So we're kind of in a bit of a range. But for me, the fact that we've broken down in 3 waves from the high tells me that the buyers are still kind of slightly in control, and that I should be looking to buy certainly to buy strength if we can start to break up through these minor highs. Actually, this morning I had a fairly good one. This morning I managed to catch the which one was it? It was this one. So there was this kind of ABC down here, and it started to rally. I managed to grab it. I think 20-30 odd pips. That move there, which wasn't too bad. Just playing it on a short-term basis, obviously. So that's euro. Dollar yen.
It's like it looks very sorry, Howard. It looks
picture.
very different to the pound US dollar, right? Because the euro US dollar and the pound US dollar, typically looks very
They made the
more or less in sync. Yeah, not identical, but when the one that goes up, it's not very common to see the other one.
Yeah,
I don't even know what time frame that was. Was that the 4-hour time frame? Sorry.
15 minute.
Oh, 15 minutes.
Yeah, 15-minute chart.
Sorry.
This one. Yeah. Yeah. So this one has pulled back quite aggressively, but then kind of retraced most of the move, bit sideways. I'd be looking to buy the break of this thing. I think if this starts cracking through the highs of the last few hours, then that might be the catalyst for the push higher. So yeah, that'd be a kind of a buy trigger for me on cable. Looking for a retest of the highs. And dollar yen, similar kind of idea there. This one's interesting because again, same thing from the trend low. We've had that 3-wave move up to the high, so we got this ABC which failed around resistance here. So that seems to be quite a big level. Then we had the pullback, the retest of the low. Then a kind of another, to me, it looks like an ABC move, like a 3-legged move, not a clear impulsive 5-wave up, and it's stalled below the again the same level. So it seems to be a lot of resistance kicking in here. So I'd be looking to sell on a limit should we get up to 143.45, which is basically this kind of broken support here. Seems to be quite a good I think a good intraday place to have a crack at the short side on dollar yen. So that one I'm looking to sell into strength on. So basically buying into strength on cable, buying into strength on euro dollar, selling into strength on dollar yen for me. Still looking for an extension of this trend, even though it does look like we're a little bit overextended. But I just think that the pullback from the trend low for the dollar on all these markets has been corrective, and that there is at least one more trend low for the US dollar, at least one more. And Swissy as well, which I don't look at too much, but it seems to have been one of the strongest currencies of late. Even EURUSD has been making new lows. So the Swiss is the king or the queen of currencies. Again, same kind of thing. Doesn't matter what you are these days. It doesn't matter. There's the trend low, and there's the A, there's the B, and there's the C up. So we have a 3-legged rebound, ABC, and then of course we've impulsively declined from the end of the C leg. So that's a 3-wave rally. Tells me the trend is still down. Big push down. Looks a little bit overextended on a short-term basis. So we're doing a little bit of chop, but again, this would be an area of interest for me around 81.90 on dollar Swiss. A lot of people trapped above that level. All these buyers are trapped above that level. So I think should we get anywhere near this point, that would be a good place to have a crack at the short side for dollar Swiss. So yeah, that's really where I am. I'm just waiting for an excuse to have a crack at the dollar going down again. Any thoughts on these markets, guys?
Michael, you can have a go. I'm just watching the NASDAQ. I'm looking.
I'm
enter a trade potentially.
I'm with Jannie on the pound. I like I said, I bought it long earlier today in London. I think I might have mentioned to you guys that I'm testing out this 6 setup in my playbook here. It's more of a breakout strategy, and in Q1 it actually did pretty good. It ended up at like I want to say 14.8% or something like that. I had one of my devs create this EA, so I'm monitoring it daily just to kind of make sure he gets all this stuff on point 1. But 2, I am actively like trading it as well. So it ended up working out great today. I took it. I think matter of fact, I'll go ahead and share my screen.
I'll go for it. Yeah, go for it. I'll stop sharing.
Jannie. Oh, okay. I don't know what just happened there. I just disappeared.
You're back now. You're back now.
Cool. All right. So yeah, I'll start with pound, and then I'll go through a few other ones. I did have a small trade today on something. I'll point that out. So cool. This is more like this strategy that I'm like testing out. It's like on a whole nother setup, right? This is like again a fifth play that I'm putting here together, right? So it's really a breakout strategy. There's no retest on this. It's just purely a breakout. So as you see, this is like the end of Asia. Then it come over here. This is like right before London open, and then it's and I just mark the lows and the highs with this. I can actually take this off because it already happened. I'll take that off. But
sorry,
yeah, in essence,
sorry. Let me just can I just interrupt you quickly? I just want to
if we got a trade, go ahead. Do your thing. If we got a trade,
yeah. Let me show you. Yeah, well, it's a bit. Let me just. You see, this is the issue. No, you see that the stop loss is not above. So I'm going to have to change this. But I've just executed this trade on a simulator to check. You know, you can also obviously add the ATR, which I haven't done. But typically, you see that we're hitting the resistance level here. And if you look at the half an hour and the 1 hour, as you probably know, well, even though I haven't placed the trade in a while on the NASDAQ because of the extremely volatile conditions, what I like to see is like out of the 3 time frames, so the 15-minute, the half an hour, and the 1 hour, I want to see at least 2 of them lining up. So yeah, on the half an hour, you can see we did break out. This is not the best candles. They are bearish, but they kind of almost like doji little candles. And then the 1 hour is definitely bearish as well. So what I do then is I go to the 1 minute time frame, and then I look for resistance levels. Ideally, would have like pierced through and then reverse. But I got into this trade because it did kind of break. It did break out. You can see that little arrow there. That means it's a confirmed breakout. And then the next candle just completely engulfed the previous one. So that's why I took the short. But usually the stop loss is there's quite a bit of clearance between where the stop loss is. This is a bracket order. In other words, the moment you enter the trade, the stop loss and the take profit has already been preset. So you enter the trade and the take profit and the stop loss is already set. And then what I do is there's usually space for me to move the stop loss lower to say the high of that candle. Yeah. Does that make sense?
Yeah.
But in this case, you can see the stop loss is not even above that. So it is a bit, not ideal. Right. But you can understand why I'm shorting this trade, right? Because it's hitting the resistance and the fact that 2 out of the 3 time frames are bearish.
Right. No, I like it. I like it on the 15-minute too. I like that pattern.
Yeah. So this is we'll probably hit it, but I don't really like it. So what I'm going to have to do is, the thing is, like, if you trade minis, you can reduce your trade size to micros. But if you're already trading like 2 micros, you can only go back down to 1 micro, and that's the smallest you can trade, right?
Yeah.
So I may have to do that so that I can. So what I can do then is I can, with a 1 micro, I can double the stop loss, because at the moment my stop loss is 100 ticks. That's 25 points, which is actually quite a lot. And the take profit is set at the same level, so I may have to like double that and reduce the trade size to just 1 micro. So yeah, but let's say we'll have a look and see how if this trade goes to the take profit or not.
Okay.
Yeah, it's not far. But does the trade make sense?
Yes.
So it's like on scalping. Scalping for me is I keep it really straightforward. There's no I don't look at patterns on scalping, because the 1 hour time frame is the furthest out I'll go. So it's the 1 hour. I'll look at the daily to get like some sort of bias, but the bias is definitely not clear for me. Like, even though I am bearish, it's not like there's no strong catalyst, if I can put it like that. It's not coming off as well. It is actually coming off a resistance, but okay, they just took profit there. All right, but I'm going to have to adjust that for the next trades. As I said, it's not ideal when your stop loss is like not at the high of the candle. It's like inside of a candle.
Yeah.
But anyway, to get back to the point, when I scalp, I don't look at things like ascending triangles or higher lows or anything like that. It's very much just bearish. If I can see, like, over here on the half an hour, it did break through the support level on the 15-minute a while ago, and then if I could, well, in this case, I think there's only the half an hour and the 1 hour that lines up with the bearish candles. And the 1 minute is just support resistance, like this one. Just support resistance. That's it.
Yeah.
Right now, the support resistance is actual support resistance lines that's been drawn, and also the VWAP. So I'll use the VWAP itself, the 1 standard deviation, and the 2 standard deviation. But I'll only be interested in those levels if I can get a bias on at least 2 out of the 3 time frames, right? Because I've mentioned this before, but if 2 out of the 3 time frames agree, and then I get a setup on the 1 minute, then that means 3 out of the 4 times, 3 out of the 4 time frames are agreeing with this, are in a kind of harmony. They agree with each other.
Kumbaya.
But now it's changed.
That's what you want.
That's exactly right. So sorry about that, Michael.
Oh no. It's all about the live trading. It's all about the live trading, whatever we need to do.
Yeah, for sure.
Let's see. Well, yeah, I was just mentioning this little breakout today. This was a super simple. And this is actually on a 5 minute. As you see, this pretty hit.
Sorry.
Quick.
There we go.
All right. Okay. Right at 205. It was like a 20 pip stop loss, 30 pip take profit. It's a 1 for 1, 1 for 1.5. This thing hit in 1, 2, 3, 4, 5, 25 minutes. So super quick scalp today. That I'm like testing out. And the cool thing is I took this on my not main account, but the account that I'm testing this with. And then I seen that it worked for Q1, as I mentioned too. So I do have 2 challenge accounts connected to it as well. So it hit on all of them, which is great. Nice start off on Monday. I'm bringing this up now because I think I might have mentioned it to you guys a few times throughout like sessions, but this is getting to that point where this is turning into something, right? So we'll slowly roll this on out for everybody else. Nice, super easy, simple, strategic strategy. Nice and simple to really make happen. And as you can see, it went further. And Jannie, funny enough, I actually used the ATR for this strategy, right?
Oh, did you? Oh, nice.
Yeah, the yellow line signifies as long as my TP is within the yellow line, it's a trade. Like we can do it. Like it's a setup for the day. I call it on the board. But if it surpasses it, which is yesterday's ATR, then I can't take it. So this is what the yellow line is. The green one is the high, the red one is the low. Then we got ATR low and the ATR high. So this one worked out perfect. As you can see, it worked out. To be honest, I wish they all worked out this great, especially in this short amount of time frame. But just wanted to put this on the board just to kind of show you guys this is something that I'm really looking into now. And this is my only and first setup that I have fully automated with the EA. So super, super cool.
Really? Did you? Is what is like? Did you just pray? Is it like one of those hybrid ones that you first identify the conditions before you switch it on, or do you just leave it on?
Nope, I leave it on all day. It's set up to only trade within a certain amount of time frame, and that's really it. I just leave it on all day long. I can actually show it. I have to put in this code. Let me see. I can probably do it really quick.
Yeah, just let me just get my notepad out. What's the code?
Jannie, you are so funny, bro. You are so funny. I think you're the funniest person ever on here. Right?
Sorry, carry on, Michael.
No, I'll pull it up. I'll pull it up in a second. I just want to show this on GU. You mentioned earlier you were long on this one. Same here. My bias is long for this, so I was happy to make sure this worked out today. So nice little scalp in the morning on this one, guys. And literally, I don't even really trade London like that. I just see an opportunity here to add another tool to my tool belt, and I'm all over this right about now. So it's working out pretty great.
Does it do anything in the US session or just the London breakout?
So just the London right now, and I'm only trading 2 markets on it, right? So let me show you this. So this is GU, right? And I'm also trading GJ on it. If you look at GJ, you see how the ATR, this is the yellow one is the ATR. This is too close for me, right? Like so GJ was a no trade today. So say hypothetically speaking, if I was
that's so good, Michael. I'm so glad you are using that, because it's it will keep you out of so many losing trades.
It will.
Like
It
a
will.
lot more than you think. Yeah, the ATR is very. I mean, I spoke about this in a different session. If you look at the ATR, like a bell curve distribution of the ATR, and the candles that's twice the size of the ATR or half the size of ATR, they fall on the outskirts, so they're not the norm. So bigger than ATR is typically things like FOMC, core CPI, NFP, that kind of stuff. And then on the like much smaller than usual, that's typically days like bank holidays and really slow markets for whatever reason. They fall on the outskirts, but here in the middle, ATR. Like they trade within the ATR,
all day.
It just makes sense to use ATR as part of your trading strategy. Sorry, carry on, Michael.
No. And I totally agree. That's why I think initially when I was telling you like my main strategy I use with the 5 setups is ADR, the average daily range, but this is ATR, the average true range, right? So just how I just showed you guys, the last one made sense, but this one doesn't make sense, right? Because if I'm risking $1 to make $1.50, that will put me, as you can see, it's about somewhere right here. It's past the ATR from yesterday. So today was a no trade day. And as you see, it didn't go. Just look at this.
It stopped right at the ATR, right? It stopped right at the ATR. Yeah,
it did. So again, I get past a lot of stuff every day for the most part. Like, look at this, look at that. And most of the time it's just garbage. But this one, this particular setup, I'm trying to tell this guy, I'm like, dude, who takes breakout trades? I'm like, what happened to break and retest? And he's like, no, I know what you're thinking. This works. I'm like, he bugged the hell out of me about this. I'm like, okay, let's check it out. And he was right. He was right. I'm like, you know what? Let's see. He put it all together for me. He said, let's see. I'm like, I don't do anything less than a quarter on like 3 months, like looking at something. And then when it worked out, I'm like, oh, technically this could have passed the prop firm challenge. I'm like, all right, now we're onto something, right? Great job. Kudos to you. Now we're onto something. So I do have this actively in play in my book. So only for the past 2 weeks, right? Today's the 14th. So only for 2 weeks now. But Q1 has been great with this. And even just sticking to the rules is, again, as you can see, GJ was a no trade and it didn't work out. But GU was a trade and it worked out beyond quick, like in the first 25 minutes. So just wanted to show you guys a glimpse of that.
Yeah, it'd be nice to see an equity curve.
Oh, yeah. So I got one of those too, right? Check this out. Check that out. I got this on my Facebook. Let's check this out. So yeah, Q1. Come on. Cool. So we are here. Right. Yeah, we're like right here. Cool. I only got this one on here. So yeah, I'll scroll down here. This is where we were. Oh, dang, it's taking a second to load up, it looks like. Come on with the ads.
I nearly clicked on it, and then I realized it's your screen.
It's loading.
Not really.
Sorry, guys.
Okay,
here it is. So it looks like we are. Come on, man! I got tons of ads on here. Okay, so yeah, this is where we are now. So this is slightly the curve, right? Equity curve, not too bad, especially be hands free. And then I just want to bring this at the bottom. This is up, right? So it started off the year not too great, right? And I think it's because the whole administration stuff that went on, but took me down, brought me right back up to break even. And then last month was great, which is really what I was like, all right, maybe we might be on to something. So put everything into play for it. And then so far this month it is down like 5%, but Yeah, doing not too bad. And just keep in mind, this is all mechanical. I'm not doing anything with this. Like nothing at all. So far, not too bad at all. Again, I think the highest it was up was 16.57%. Right? March 27th. And again, I haven't taken one manual trade on this. That's the best part about it. That's freaking awesome. I'm sure there may be a few more tweaks to probably work out, but it's doing great so far.
All right, so if we can go back to the charts, if you don't mind. Okay, so what's your take on? I think you said you're also going to hang back now on the pound US dollar.
Yeah. So this is again the main. I just want to show you guys that new strategy I got going on here. But I'll come back to that. Let's go to GU on me manually checking this out, right? Yeah, so I drew this last week. I think I left this on for one of our other sessions. For me to have engaged in this trade, I was looking for more of a move like this, which it did not happen, right? I'm still the same. I wouldn't actively engage into this until I get some type of interaction off the 200 EMA. So this would need to come down quite a bit for me to really engage in it, right? Because as I always say, as soon as the 50-200 cross here, I need some type of interaction off of here. Like I needed to touch the, I need to touch the 200 EMA from here. All right, so we do 50-200 cross. Yeah. I know I'm in level 2, right? And I'm looking for M's or W's off the 200. Of course, in this case, it's a W off the 200. So same exact thing as I always say. This needs to come down and give me some type of move like this, then go back to the top. I won't be interested until it does this, right? And then I would target, whoops. Let me move that back down. Then I would target something right here, like where these highs are. This will be my move. I'm not touching this at all until it does that, actually. So we're looking for something like this. Stop below here, above, nice little 2.5, right? Something like that. I'm not touching it until it does this. So I'm still long because my bias is long on this setup, but for me to engage in it, I need some interaction off the 200. Because typically what happens is no matter what, we can go wherever until we get price touching this 200 EMA on an hourly chart. Then we get some type of interaction on it. Then we can go back long. So for my setup, I'm not touching it until this happens. Simultaneously,
I guess it ties in with what you're saying, Jannie, about the fact it's gone up so steeply.
Yeah. It's a combination of
look how
it's a combination of that and the resistance.
That's really quick.
Sorry.
Yeah, this needs to come down a little bit, right? Give me this reload as well that I always talk about, right? And then I'm interested in it. If this happens, I'm all over this trade automatically. But I'm not interested. I'm not even looking at this really until I see price has touched the 200 EMA. I need a steep fall off because it's pretty freaking high right now. If you can even look on the TDI, even at 70, right, it's overbought. It says 64. So I'm not really into this just yet.
Yeah. It's interesting how you got the difference between kind of mechanical systematic stuff and what we see and what we feel. And what we think should happen. And you say the performance on the system is like it don't care about these lines. It's like it just wants to break out.
That's it.
Yeah,
I like that.
Yeah, that's it. And this is why you got to have it totally separate, right? Like I'm the last person to want to go mechanical. Like, right? I know there are systems in place that even as small as it is, like, right, when we set alerts on TradingView and it's like, hey, let me know when it gets here. That's semi quasi like EA-ish, right? Like, hey, send me an alert when it gets here. But I don't want you to enter the trade for me. Like, just let me know and then I'll enter it on my own. So for me to be dealing with any EA at all is like far from my comfort zone, but that's how you grow as a trader, right? Like you got to always be evolving. And data tells everything. So if this thing could pass a challenge and I didn't do anything, right? I'm like, whoa, now we talking. That's my type of language right there. Like, let's do it.
Yeah, I mean, just to get back to that, the pound US dollar and the fact that it's been rallying so steeply for the last this is day 3, I think, 3 days now, and that you had the resistance. We also in like really like strange trading conditions as well, right? The moves are much bigger than usual, and
they are.
So I would like to see a pullback, but I'm also aware of the fact that it can just keep moving.
It is.
You don't
if you
know,
keep moving,
it's just
totally keep moving. Totally keep doing it. And I'll be honest, like even when I just showed you guys, right? Like this drawdown that has just happened on this EA, it's the weirdest thing because typically all year it takes 1, maybe 2 trades a day. But over the last maybe like 10 days, it either hasn't taken trades or it's taken 1 and it's lost them. And it's because of the ATR. Really, the ATR has been very, very, very high. Like in 3 months, I've never had 2 days back to back where there was no trading days. In 2 weeks' time in itself, I've had 3 days like that. So, I mean, the data is you can't even deny it at this point. It's definitely a lot more volatile, and it's just putting everything in a range where it's a bit more questionable, but at the same time, you just got to push through in essence.
Because what yeah, I mean what you're saying with these like Asian session ranges back in the day before all this volatility, they were generally quite small.
Yeah.
So now we're starting to see moves in the Asian session as well,
and
that's getting you close to those ATR levels. So that's probably why it's not taking the trades.
Yep. And literally, guys, like, I mean, I'm the trader, I'm not the developer, so all I can do is explain that part to him, and I'm like, dude, you won't take it because of this. And if that one rule is broken, it just will not take it, like every single time. Right? So just one of those things where, I mean, it's just trading. The markets are not always going to be the same. It's a lot more volatile. As we all know, with this tariff stuff going on, like everything's swinging back and forth. Even my own personal manual trades, guys. I'm known for taking 2, maybe 3, 4 trades a week. I've been at 1, maybe 2 trades a week for like since this stuff has started happening. It's kind of crazy. So I'm just hanging in there, being resilient, sticking to my trading plan, and making sure I'm not doing nothing stupid.
That's the most
even though I did something stupid 2 weeks ago on S&P.
Yeah, I guess it will never go away, right? We all have
it won't. It won't. It's just something about it.
Yeah.
So cool. This is a pound. I did want to get to Bitcoin, right? Since we were talking about this as well. I'm looking on the daily. And I still have my same levels here, guys. These same alerts set up, right? I got an alert set here for wait. Second month 200. Why did I name it that? That's interesting. I'm going to rename this. This should not be named this really. But anyway, a close above here, above 90,000, I would definitely be bullish at this point. And then a break above this is just an indicator that, hey, this is breaking all-time highs again. But if it comes down here,
it's a bit late then. All right, time to buy. We've made new highs.
Oh, no. I would want to see, so for my strategy, I want to see the W, right? I want to see this W pattern. Yeah. Hold on.
Above 90, yeah.
Yeah, I want to see some type of move like this, close above.
Yeah.
My stop is here. I'm sorry, my entry's there. My stops is here. And hey, maybe I'll start looking at it at that price. Like my stops will definitely be at break even, probably about halfway from here. I'm at break even, but at this point, I just want to see it again. Let me know what kind of alert is going on there. But I did draw 2 other ones, which I think I deleted on accident. But I was looking at this price here. All right, if this thing comes back down here to 73. Okay, so yeah, I'll just put newest Low. I can't spell today. Newest low. I say that every day. I can never spell. Newest low, right? And I don't really want to put more on here after that.
Yes.
But yeah, we'll put it on around here. Just to be totally honest. And I'll just put new low, right? I honestly don't think it's going to get here, but if they do, I would love to know that. Right around 54,000, 55,000, somewhere around there. I don't see this going lower though, guys. I'm gonna be totally honest. I'm not bullish right now on Bitcoin because, again, for me to be bullish, for me to be bearish, things have to change. The conditions have to change. As you see right now, as I always say, I got a nice 50-200 cross. I know I'm in level 2, and I'm looking for W or M's, right? Off the 200. Dang, off the 200. Right, as I always say. So this is me here. And then this is my extra basis, right? We got this move off the 200. What did it do? It went longer. Next time we had this move off the 200, what did it do? It went longer. This is the third time that we're actually getting into that same type of area. And to be honest, it looks like it's about to do the same damn thing. Another 2, which is kind of high. Let me make this a little bit lower. Yeah, another W off this 200. Any close above this 50 at 90,000. If on the daily chart we get a close above 90,000 on the daily, I'm long. Like right now, I'm not long. I'm neutral. I think you and I talked about this, Jannie, last week with Sam. I'm neutral. I don't. Or maybe it was Paul. I'm not sure. But I'm neutral. I'm not long. I'm not short. But on the long side, if we get a close above 90,000, I'm long. My bias would change to long. And then on the short side, this 50 EMA, if this comes to the downside and crosses, right, within the 200 EMA crosses like that, at that point, now I'm short, right? I will be short at this point here, which is about, let's say 80. Well, we need to close. Well, I can't say it just yet. These two EMAs need to cross to the downside. So far, they have not done that. In fact, they haven't done that since this cross, which was March of 2023. So we're talking about more than a year ago. The 50-200 has not crossed to the downside at all. So I'm not short on this at all until this happens. But once it does, then I will be. Right? Then I'll say I'm short here. Once this crosses. But until then, this is long. This is still long. So I'm neutral right now on Bitcoin. And Jannie's words, need to let price action play out and see what's going to happen.
Yeah, for me, the price action has played out. I think there's I know I say this in pretty much every session, and that is we all look at the markets differently. That's just how it is.
Right.
But for me, there's enough that it's already turned. So
it's turned what? Right. It's turned bullish.
Yeah, I turned bullish Friday. I was neutral the whole week. I mean, I changed my bias from short because my bias was short for a number of weeks up until the major support level on the monthly. That's the level where I'm like, the short bias is fallen away.
Right.
And then turned neutral. And then from Tuesday, neutral bullish. That was my take on Bitcoin up until Friday. It's like, okay, now I'm bullish. Okay, because we had the double bottom, confirmed double bottom, and the higher low coming off a major support. So for me, it's there. But only time will tell, right?
Right.
Only time will tell.
For sure.
So yeah. I just want to have a look, if you don't mind, Michael. I just quickly want to get your guys' thoughts on the dollar index. The dollar index has been trading pretty aggressively down. So if I just share my screen here. There we go. You should see it, right?
Mm-hmm.
So, okay, but this what's that blue? Okay, this blue line was actually well, not last week, the week before, we had this very long lower shadow of that candle. I love those long lower shadows. Howard, you'll know that. It's the probability for it to trade into that is just so high. And if you combine that with what we saw on the 4-hour time frame, it was a pretty nice picture. We had this break here and then a retest. So that ties in quite nicely with the lower wick or the shadow on the weekly time frame. Pretty big difference between the 4-hour and the weekly, but the weekly is pretty good I feel to get some sort of idea of what's likely to happen, especially on single candles, especially when you have like long or lower wicks and so on. But where we are right now, and this kind of ties in with what I said about the pound US dollar. You know, we are at this this support level here. And this is where I need you guys to come in here. See that level? Oh. Right. That to me is a support level. This is a very steep drop. We had a little bit of a pivot and then there's just this continuation, but we now at this support level here. And today was it was a bearish day. It just kind of opened higher and came back down, but with a slightly higher wick. Do you think that there's a possibility for this to retrace, or do you feel this is just going to crash through there? What's your take on that? Because for me, this is very similar to what I see on the pound US dollar. It's likely to go lower, but maybe not right now.
Right.
Do you see what I mean? Because of the steep drop and so on. What's your take, Howard?
Yeah. So yeah, it is a support zone for sure, and it does seem to be finding a bit of support there. So I think there is scope for another one of those that we kind of sideways high that we saw prior to this last drop. That whole consolidation we saw with the euro dollar and cable just going nowhere for a couple of weeks. So we could see another one of those, but I don't think it would be a biggie if we see it. I would say I'm kind of on alert to go for the acceleration trade as well, because I think that's a major breakdown. It's the start of the next leg of the bear market from 2022 from the high. And you might want to call it a double top if you zoom out and just go back to 2008. How that was the bull market, and this is the double top breakout. So I wouldn't be massively surprised if it did kind of break through it and start to accelerate. It's the end. It's a multi-year cycle high that we've seen.
So I'm trying to zoom in on 2008. Yeah, so this was a support level. We did get a bounce off there. This is the weekly time frame. So a bit of a bounce and then a continuation. So
it's possibly we could see a little bit of short covering and then before it goes again.
Yeah, and I think that's where we are right now, right? I'll just go to the end. Man, this is going to take.
You want to click on the scale and bring it down, kind of thing.
Well, Michael already said, if somebody doesn't use TradingView, you can't take them seriously. So he already made his position clear.
Well, at least you're using TradingView on the web-based version, I guess.
Yeah, this is the web-based. Yeah. So I feel like this is probably potentially. I do think, and this is again, this ties in with my take on the pound US dollar, right?
Yeah.
What's this Bitcoin? Oh, Bitcoin's moving up. Hopefully, this is the support level that we great. The pound US dollar. See, we're not quite at that resistance level, but I feel exactly the same about that. It's just not. The probability is so low how can I put this? It's very difficult to stack probabilities.
Yeah.
Do you know what I mean? It's like say it's more likely to go up, or it's more likely to go down from this point. Very difficult to do at these levels. Very difficult to do. So I do think it's gonna be best to. I know, Howard, you are looking to enter a long position based on a much smaller time frame, right? So
I'd buy a upside break on this thing, just looking for it, because it could be one of these things that, I mean, if you zoom back to the start of this whole daily uptrend, that pullback is just just a typical correction of it. This is like the start of the next. This is the start of the next leg up. I wouldn't want to stand in the way of it unless you know, I saw something really clear on the short-term charts. You know.
Yeah. Oh, Andre has joined. Hey, Andre, good to see you, man.
Hey, Andre.
Pound US
Hey,
dollar
what's up, Andre?
breaking 1.32. Pound US dollar breaking 1.32 goes to 1.332. Or does it correct before moving higher? Yeah. I think you just joined. We've been talking about that. It's a bit for me. Howard is keen to go long. So Howard can maybe you can just go through that again if you don't mind, just on your setup, because you know we all trade differently again. But for me personally, I feel it's a little bit risky right now, just because of the extension of the move and that we are hitting this resistance area. For me personally, I'm just going to stand back a little bit and see what it does here. Ideally, I would like to see just a little.
Yeah,
little
let me just.
So I'll just stop my screen, then you can take over, Howard. Sorry.
Yeah. Sure. Okay, should be coming through shortly.
Yeah.
Okay, so this is obviously daily time frame. So what we've seen from this low, just below 121, is an impulsive 5-wave rally, which topped out there, rejected. That for me is the whole correction of it. That's the one, that's the two, and this is early stages of a third wave, which should see the acceleration higher. So that's the reason why I'm kind of looking to buy breaks and thinking, well, you know, maybe it could pull back, but I'd rather be, you know, on the long side as it breaks through, you know, rather than waiting for a pullback that doesn't come, because I think this is going to be going up here. So for me, bias strongly bullish, but just looking to buy it on strength really.
Yeah, just to be clear, that is the daily time frame. What I showed was the 4-hour time frame, just to put that into perspective. Yeah. Now I'm also very bullish. I'm just I just don't really like the things I just showed you. That's all. Yeah. I'm not saying it can't continue, but it's already moved nearly 500 pips. So that big drop was 500 pips, and then I'm on the 4-hour, but I mean it doesn't really matter. But you know, it's just those big swings.
That's the weekly time frame. So basically, we had the kind of long upper shadow there, long lower shadow there. We've equalized the whole thing, and now we're ready to continue the trend, in my opinion. So
I fully agree with that. I fully agree with that. My bias is like 100% in sync with yours. What would you say is your like kind of take profit area? What would you target there? Do you expect it to break that high that you can see there, that latest high, or?
Yeah, I do. Yeah, I think because as I say, that for me is the whole correction of this first leg up. So that's the swing. That's the correction. So we should be seeing some kind of repetition of this whole swing from the low, which would take you, I think, towards 140.
What is 140? Is that at previous towards your left? Is that resistance level there, or?
Let's see.
Or why?
We kind of a few lower highs on the way down there. Kind of 138, 140. So big, massive resistance up. Once we get above 140, then it would be a little bit toppy, I think, if and when we get there. I'm just wary of the acceleration. I don't want to be fading it or missing it, kind of thing.
FOMO. Oh, Howard is you've got some FOMO going on.
I need to be in. Right. Can't miss the move.
Right.
Okay. Robert's got a question. I know we talked about the steps going from developing to break even.
Stranger things have happened. Yeah.
Sorry, Howard. Okay, and then, but what did you tell yourselves when you used to struggle with breaking your rules? Okay, if you struggle with things like that, where did Howard go?
The same thing happened to me. The same thing happened to me. I don't even know what that is.
Oh, okay, that's strange. Okay, it doesn't matter. What did you tell yourself? Okay, if you are struggling with breaking your rules, in many cases, you are focused on the outcome of your trade. You're not focusing on process.
Yeah.
Right. Because you are attaching like FOMO and all these kind of things. It's typically when you look at your account and you're trying to make money every day, and it's all about making money. You're not focusing on process. Right. That's the first thing. The other thing is, if you do have things like Howard, FOMO, I wish, no, I'll wait for him to come back. Oh, there he is.
Say, wait, when he's here to defend himself.
If it's,
I had to
exactly.
go. I had to leave. I'm back. I'm back now. I'm back.
We were just talking about your FOMO issues and how we can help you, Howard.
Please do.
No. But you are just honestly, like if you reduce your trade size, if you are struggling with things like that, reduce your trade size to a point where the outcome, it doesn't affect you in any way. You don't get excited because it worked, and you're not bothered because you lost it, because the value is so insignificant. Do you understand what I mean? That is where you need to be. Because you've got to focus on doing the job before you get paid. Don't focus on payday, because you're not going to, trading is difficult and all of that, but you got to focus on the process, not the outcome. It's usually all these breaking rules and all that it's almost always one of those two things. Like you focus on the outcome, you're not focusing on process. And the second thing is you're just trading too big. So just reduce your trade size to the point where the outcome is insignificant. You don't get excited about the outcome. Right. Even when you make money, it's like, okay, I did everything right, and it did go to take profit, and like I made $8. Right. You're not going to get excited about that, but it's a very big leap forward, because you actually did what you were supposed to do, and that's also like why traders, in my opinion, they go, oh, I do so well on demo account, and then I go over to a live account and I screw up. Yeah, because now it's like the emotions are involved, and you are focused on outcome. On a demo account, the outcome is kind of, it's not real money, so it doesn't really. There's no. You see, so how do you transfer that success to a live account? Just trade small.
Yeah.
And focus on process.
Perfect. That was perfect. I agree. Yeah. I will say, one, that's a great question, right? Because it's almost like you're looking for that missing piece, which is huge, right? But two, I think, Jannie, you hit it 80% on the head, like damn near spot on, right? I tell traders all the time, it's the process. That's what's most important. Nothing matters more than the process right now. Don't worry about the Lambo, the helicopter, all of that stuff just yet. Don't worry about none of that just yet.
Lambo and the helicopter.
Focus on doing the job right first. It's almost like you're asking for a raise, and this is your first week in the job, right? Like, get your stuff together first. Show your value. You know what I mean?
Exactly. Like, you got to do the job.
Process. For me, I'm just being honest, right? I could have a losing day, like I actually lost money, but I stuck to my process, and I'm good for the day. To me, that's a green day. Like I won for the day. But if I have a winning day and I broke a rule, that's a red day, right? Like the process trumps the outcome automatically 100%. Like that's just how it is, right? So yeah, sure. just what Jannie said. Lower your lot size for sure, so you don't get excited or like, oh, I'm gonna make $50, $100, $200. No, focus on making $5 or something, right? So you're not excited about it or whatever, and just nail down that process. Nail down that process really, 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 really good, because repetition, right? Repetition is what's gonna really get you to that moment and that profitability land that you're really looking for. So yeah, 80%, like I second that all the way there, right? And then just the last 20% I'll say is, at one point, no matter what you're doing, right? It could be trading, it could be driving, it could be dating, it could be basketball, any sport, whatever it would be, right? At one point, you notice that you keep screwing this part up. You just keep messing this part up. Like I'm good all the way until I get to this part. And then like something should finally click, and you're like, you know what? I can't keep doing it. I can't keep dating these fat girls who like, dressed all raunchy and stuff, right? Or I can't keep trying to shoot with my elbow all the way out here trying to make it, right? Like, no, you got to tuck your elbow in. That's how you shoot it. Whether you bowling, playing golf, whatever it is, you can use this analogy to anything. If you keep making the same mistake, it's not the game or the process. It's you. You got to figure that part out on your own, right? And just know, you know what? I'm good until I get to this point right here. And you should nail in and super focus on that part to kind of take you over, to that next level. So
yeah. I mean, just to add to everything that Michael has said and Howard is about to say, is like don't worry about a missed trade. There's no such. Honestly, I don't believe there's such a thing. There's no such thing as a missed opportunity. Like I'll use the pound US dollar as an example, right? This range that we've been in for. Or was it 3 weeks or something? Like basically from the beginning of March, right up until the beginning of April. So 4 weeks. If you count the beginning of this low year to the high where it eventually broke out from. You wait for those of you who have been watching my sessions. I've been waiting for a level lower, never got it. Okay, and then it broke out, This was the tariff announcement, and it broke out overnight. And then it rallied up, and I missed it, okay, because it happened like while I was sleeping. It's not like it's not. Did I miss the move? Well, yeah, but is that reason to get upset? No, just price keeps changing. Tomorrow the charts will look different again, and the day after that the charts will look different again. It's almost like when you play cards or whatever, they just reshuffle the deck. And they hand you a new chart every single day. So there's no such thing. If you miss that one, don't worry. I got this one, right? I got that one, which was much better than that one.
Yes.
Yes.
Yeah.
So just don't worry about. There's no such thing. So so how this is for you? Your FOMO issues. I'm just joking. But I honestly,
I like.
Carry on. Sorry.
Yeah, I like to buy high and sell higher.
Right.
Well, that's fair enough. That's your strategy. But in terms of things like FOMO and so on, and that is like maybe Robert, do you find yourself breaking rules because you're missing? You're afraid you're going to miss out on an opportunity? I mean, this is the 4-hour chart, right? Like if you scalp on something like the NASDAQ, the 1 minute time frame, I mean, yes, and this was another opportunity. You see this because you had the bullish on the 1 hour. There's a breakout and the retest, and there you go. So if you missed the one that I took earlier, that's short because the buyers on the time frames were short. If you missed that one, you
see what he said? My bad, Jannie. You see what he said? He said I was really close to passing an account last week, and I was looking at payday instead of the work before. See?
Yeah.
We've all. First of all, don't feel bad about that, Robert, because we have all been there. Trust me, we've all been there.
Yeah. Oh yeah.
That's just part of the learning curve, right? I say all the time, like this learning curve when it comes to trading is so steep you can fall off the damn mountain easily.
Yeah, I mean, Robert, one thing you can do, like if you get close to your passing your account again, if you get close to that and you know that this is where you start to mess up, because now it's all about you thinking about you so close and all that. You don't think about that when you start a challenge, right? That's not on your mind. It's like it's almost like it's more relaxed. There's no pressure. But as soon as you get close to passing it, there's like this almost like stress getting involved.
It
like,
is.
Oh, and then the doubt and like, oh, am I going to mess up? Am I going to do this? What you need to do when you get to that stage again, reduce your trade size, right? Just reduce your trade size to a point where like the loss is not going to be a big deal. And then just, try to do that. That would be...
And something else too, right? Just I think Robert, you was here last week when I was on with Aymane and Sam, and we was all speaking about something close to this, right? So I don't know if you guys know this, but like it's some crazy, ridiculous number as far as car accidents. That like majority of car accidents happen when you're like less than 2 miles away from your house, like weirdly enough. And that's because you kind of get more relaxed. You know where you at. You might run that light or break that stop sign, whatever it might be. You just kind of, you don't give it the same attention that you would typically give. And that translates to trading as well. You're so close, you're thinking, oh, all this is working. And then you're just like, you know what? It's not the best trade, but I'm gonna still take it. That's not the way to do it. In fact, that's the time where you should be the most cautious. So like Jannie said, reducing your trade size is a great, result, a great step to take when you're doing all of that as well. But when you feel that anxiety or that emotion coming over you, like you gotta find a way to settle that down, because it's gonna end up ruining you in the long run, like for sure. It's the chance of that happening like that is so high, it's ridiculous. Like if you could quantify it, you would act and trade differently. Just knowing that, right?
Yeah.
Like just imagine knowing that if you could drive all day long in your car and you'll be fine, but there's an 80% chance that once you get within 5 miles from your house after you get into an accident, you would, if you knew that data, right, you should logically think to get smarter and be more cautious. This is the time to put both your hands on the wheel at this point. Cut down the radio, make it a little extra step, drive a little slower, once you 5 miles within your radius of your home. That's what data should tell you to do, right? So just even knowing that, just how you know that she's tend to mess up at the end, Robert, it sucks to know that keeps happening, but that's great data to use for next time.
You can adjust.
Yeah.
Adjust. You can definitely you can work on some plan, because you probably lie in bed like thinking, oh man, okay, I only need like $500 more and I'm passing my challenge. It can definitely mess with you. But hopefully that you can apply. You do need to have a strategy that you're going to implement when you get to that level again. Otherwise, you're just going to repeat. You're going to spin your wheels. You're going to be like a hamster in that little wheel, right? Making no progress. But let us know how it goes, Robert, when you get close to your next challenge. When you get close to passing your next challenge.
You show up here every day, Robert. You might as well keep us posted on your journey, right? So we can be your accountability coaches when you're getting close.
Yeah. If you do it again, we ban you. No, we'll never do that, Robert. We'll never do that. Don't worry. You can ask us any questions. We're always here for you. I just want to ask you, Howard, on the pound US dollar, the 15-minute time frame. I know the time. Is this something you'd be interested in or not? On the 15-minute time frame.
Yeah, not the best. Because I think you get to this time of the day and think that everything kind of slows right down. At least it typically does. But obviously now we've got a new president. Best time to trade is really, as Mike was saying, just looking for that sort of London breakout. Early European, because they come in after the Asian session. That's when the liquidity hits. And either you get a trend move or you get an attempt at a trend move, then you get a reversal, and very often that becomes the trend move for the day. So my first trade of the day on FX is usually just coming in at like 7 o'clock, looking to see how we the first breakout of things, and that's really where for me the big money comes from.
Yeah, I agree with that. I also believe like the New York close and 4 hours prior to that, the last 4 hours of the New York session is just not a good idea to trade. It just slows down. Yeah. Even though I've seen some pretty big moves during that period, but it's typically on yen pairs.
Yeah,
it's not Japanese yen pairs. It's not anything else, because it just dies down completely. And even if you look at
the only thing that moves to me, and this is why when I say part of my rules is right, like when it comes to indices, gold, Bitcoin, I'll trade those till a little bit later, maybe 2 o'clock. If it has to be a perfect setup, like it just has to. But
you mean like right now? Like not right now? You mean like that?
Yeah, I will leave that the hell alone, actually. Right, but something like pound, any Forex pairs, I'm done at 12 o'clock, guys. Like, because it never works out. And my data always tells me that, once you take trades after 12 o'clock, it never really works out well for you. So I stay away from that. But S&P, US
Forex,
30, NQ, Bitcoin, gold, those will run for me till about 2 o'clock at least. Like, it kind of depends, because sometimes you might get that late move in the day and it ends up running. But that's a very limited amount of pairs, right? Only 5 pairs to even really look at.
Yeah, the thing, I mean, Forex can, I'm sure you guys will agree, it can move. If it doesn't move during the London session, it can move like at a very like weird time, like 1 p.m. or something, 2 p.m. All of a sudden you get this big move. And I'm not talking about when the London session and the New York session overlaps either. It can just like move at any time. But for me, it's like the London session is not always clear. It's not always you're not always going to get it set up. Many times you can get tricked into one direction and it reverses in the completely opposite direction, and then go back into that range and just get stuck there with really nasty looking candles. So that is also, so your bias needs to be clear, I think, to avoid that. But when you get those type of London Open, that kind of behavior, then you can get the move later. So it's not always a case of like you have to trade the London Open. If you don't get it there, it's just not going to happen. That's not always the case.
Even with the breakout strategy I just mentioned to y'all, like, I mean, it'll open the London. Sometimes just how today it confirmed and hit TP in the first 25 minutes, 30 minutes. That's super rare. Sometimes you're sitting there for an hour, 2 hours, 3 hours. I didn't fall asleep. I didn't fall back to sleep waiting for it. Right. But this is where the bot comes in at. Like when I fall asleep, it'll still be there, like to be able to actually execute it. But yeah, I totally agree. Sometimes I wake up the next day, I'm like, oh, it actually took a trade. I stayed up to 4 o'clock. That's crazy.
making money when you're sleeping.
Yeah, exactly. You gotta love it.
Yeah, but I mean, Howard, I think our timeframes are more or less similar. Do you still? I don't know if I've asked you this question before, but do you like set alerts to wake you up if price hits a certain level overnight, or not?
No. I'm literally I'll come in sort of say 7 o'clock in my morning and then go from there.
I try to do that sometimes. It never works. Like,
yeah, I agree with you. No, those days I've said it. I think I've said it maybe a couple of times. Those days are long gone for me as well. Yeah. It's just like
sitting there watching paint dry.
I'm not. Yeah, I'm not waking up for that. There's no way. The thing is, like, there's enough opportunities during your waking hours. You don't have to like stay up.
Yeah.
The only thing that I will say is sometimes if I do that, right, like how I said in the alert on TradingView, when I do wake up and I look at my emails and my alerts and I see that they went off, the first thing I do is like, oh, what time ago was that? 3 hours ago. Let's see if the move happened. Sometimes it's long gone. Sometimes I'm perfect timing. You never really know.
Yeah, but to give you this example of this pound US dollar again, okay? So I just spoke about, okay, I missed this breakout because it happened overnight. I also missed this hammer candle forming very close to the support level. This was a midnight to 4 a.m. candle. That happened to be the low, okay, before the breakout. This is midnight to 4 a.m. and then the 4. And when I woke up, it was like it already moved like 50 pips. So it's like, right. So I traded the next day. I traded the pullback of this move, and I just took a 1 to 2. But that was an overnight move. That was also an overnight move. This was like in broad daylight. So it's like it's fine, because if I stayed up for this one and that one, I probably would have been fast asleep to catch this really nice one.
Right.
And to be fair, if you look at the kind of 1 minute or whatever, the 5 minute, that was when Trump was doing his news releases and stuff, and the ranges on that. Yeah. I mean, it came back like 100 pips, then went back up again. It was take a look. It was really crazy. So literally trading, if you'd have tried to trade over that, it would have been it's like non-farm payroll times 10. Really
right.
tough.
Yeah, I think it was over here. This was the announcement.
Yeah, it's really
so
volatile.
It was a pretty It was, but yeah, I mean, but if you just waited, like, not wait, like it depends on where you're from. If you're like in the US, you can definitely have caught this.
Yeah.
But if you're in Europe or a similar time zone, no, it's definitely sweet dreams time.
Yeah.
Sweet dreams, you'll miss it. But it's, whatever. There will be enough opportunities during your waking hours, regardless of where you're from or where you're based or your time zone. So
luckily,
all right.
weirdly enough, sometimes it's like spot on for me, right? Like depending on what day it is, I might go to sleep at 12:30, 1. It's like, all right, I can stay up for another 30 minutes to see the London Open at this point. Once the London Open is done, I'll go to sleep. I can be back up at 8:30, 8:15, 8:30, 8:45, right before 9, the session open. It almost works out perfect, right? But sometimes this does the complete opposite. It's like, I stayed up way too late, and I caught London, but I'm totally missed the Open in New York. And then sometimes I went to sleep too early, and I missed the Open of London, but I caught New York, right? I'm up at like 7. So it's the funniest thing.
Yeah, I mean, sometimes with those overnight moves, you might think, I missed the move, but very often it will come back in, the London session, and you'll be able to catch it. So you don't necessarily miss the move.
Exactly.
You might get another.
No, you're absolutely right. I think that this week there was a very good example of that. Right here. This was the move that when was this? The 11th. When was the 11th? Last week? I don't even know. Yeah, Friday. So this was the London Open move, coming it was such an easy trade, coming beautifully off support. But just to get to your point, Howard, you see the breakout actually occurred overnight.
Yeah.
This is like 3 o'clock in the morning, and this is just to your point, exactly what you just said. More often than not more often than not, but it can vary. It's likely for it to, especially after a breakout, for it to come and retest it. Arguably that was a retest, but you see, like during the London session, it just came beautifully back to the support level.
Yeah.
It was such an easy trade. I said that on Friday as well. I don't say that very often. It's just beautiful, like textbook stuff.
Right.
Everything was just lining up. The breakout on the longer time frames, and then the setup on the 15-minute. It was just perfect. Just very easy to trade. So I agree with you. There's no such thing as missing an opportunity.
Mm-hmm.
I just don't buy it, Robert. Yeah. Don't buy it.
Don't. It's funny, right? So I know we only got a few minutes, but I'll leave it with this. One of those huge traders, like I'm talking about 8 figures a year, would bring this up, and he said one of the traders at the desk was talking about how he was so upset that he missed this trade, and all the other traders crushed it. It made like their quarter. He was just beating himself up over it. And he was like, he was trying to get him out of the slump. And he was like, what I told this trader? And he ended up having a great year after that. And they were like, what'd you tell him? He was like, we've all been young. We all dated some girl before, and we thought that she was the love of our life. We're going to get married. And, then all of a sudden it doesn't work out, and we're crushed, right? Like you're so heartbroken. You're like, I'm never going to find another girl like that in my life, and this and that. And then later on in life, when you grow up and you become a man, you're like, I can't believe I used to feel like that about somebody, right? Like, of course, I'm going to have another relationship like this, or even better, right? So it's kind of the same thing. You think you've missed out, and that's the end of the world, but time hasn't set in just yet. That's really all it is. And the maturity level hasn't really hit me. Like, I can't believe I used to think that.
No, you're absolutely right. Like, especially when you look at your results graph. If you look at the results graph on MetaTrader or whatever, and you look at it and you see the equity curve, you go, oh wow, I've been doing really well. But if you had to really go into the trades that went into profit so nicely and came back down, you broke even. There's a lot of frustration in that, like
It
a
is.
beautiful equity curve. It's not you've done everything right. Well, you've done everything right, but you know what I mean? It's not,
Right.
or even losses that you feel like you shouldn't have taken that trade, or the mistakes and everything else in that equity curve. But when you just look at the equity curve, there's just one emotion, and it's like, oh, I'm doing pretty well, yeah.
Exactly. Exactly. Everyone is going up and down, right? Even though it's going up, that's the picture. That's the big picture, right? That's like looking at the daily or the 4-hour chart, right? Like that's the big picture. You can't be so close on it where you see this down and you're like, oh, I'm doing so bad. It's like, no, you're not. I don't even know what you're talking about. It's just a blip on the road. It's a speed bump.
Yeah,
that's it.
Exactly right.
Yeah, you shouldn't focus too much on 1 or 2 losses.
Yeah, for sure. Yeah, definitely. All right, guys. That is it for this session.
Yes.
Michael, Howard, always nice to see you guys.
Pleasure.
Have a great evening. Thank you for all the viewers. Have a great evening, and we'll see you all tomorrow.
Absolutely.
Cheers.
Take it easy, guys.
Take care, guys.
Cheers.
All right, Jannie. All right, Howard.